Good evening, ladies and gentlemen. On behalf of the CFA Society Sri Lanka, I would like to welcome you to today's virtual conversation with Murtaza Jafferji on the diagnosis of Sri Lanka's current economic crisis and potential solutions. Today's webinar is a part of a series of webinars being organized by CFA Society Sri Lanka to celebrate our 20th anniversary. Let me also say a few words about the CFA designation and the society. The CFA Institute is the global association of investment professionals that sets the standard for professional excellence and credentials for investment professionals. The CFA Charter is a designation awarded by the CFA Institute to those who have completed the CFA program. This is considered as the highest distinction in the investment industry and as the gold standard in the investment profession. The CFA Charter is a globally recognized qualification and is held by over 170,000 professionals in 164 markets. CFA Society Sri Lanka was established to support the development of the investment profession in Sri Lanka. Over the last 20 years, over 325 investment professionals from Sri Lanka has obtained the CFA Charter, and they occupy senior positions in the investment industry and other industries, such as CEO, CFO, portfolio manager, equity analyst, banking professionals, etc., both in Sri Lanka and overseas. We also have a strong candidate body with over 600 candidates studying for the CFA qualification in Sri Lanka. Our speaker today is no stranger to the capital market participants. Murtaza Jafferji is a CFA charter holder and a past president of the CFA Society Sri Lanka. He is the current chairman of Advocata Institute, a free market think tank. He is also the CEO of JB Securities and has over 25 years of experience in the capital markets in Sri Lanka. He has also served on the boards of a bank and a hotel company and the Colombo Stock Exchange. Murtaza's session will be followed by a Q&A session. Please feel free to send in your questions using the chat box. I take this opportunity to thank our sponsors, our platinum sponsor, Colombo Stock Exchange, our silver sponsors, Equity, Cal, and Senfin Asset Management. Print media partner, Daily FT, text messaging partner, TextWave. I also wish to thank our event partners, ACCA, BCS, Ceylon Chamber of Commerce, SEMA, FITIS, ISACA, the National Chamber of Commerce, and SLESCOM for their support for today's webinar. Let me now invite Murtaza to deliver his presentation. Over to you, Murtaza. Murtaza, you are on mute.
Sorry, I think you can hear me.
Yes, we can hear you, Murtaza. Thanks.
My apologies. So first of all, Dinesh, thank you very much for inviting me to address this session. I believe this is the second time that I am addressing a group of fellow CFA professionals. The first time was about 5 years ago when I addressed the audience with regard to ethical conduct, especially that was a time when this bond scandal was going on. This is the first time I'm really talking on a more technical topic. And when you first invited me, I was under the impression that I would be addressing our members. But from the viewership that we seem to have got today, it seems like it's a much wider and broader audience. So I've tried to kind of adjust my presentation so that a wider audience could be heard. And as my slides show, it is showing Advocata. My day job is in a financial services firm called JB Securities. I've been in the capital markets for almost 28 years. We also have an asset management company. So my day job really requires me in understanding what is happening in the economy. But I got involved in Advocata about 5 years ago because I felt that we had to improve public policy in Sri Lanka. And more recently, I have been appearing on television and many other public forums to get the message across, because our objective is to kind of help the population out there to really understand economic kinds of thinking and understand what is happening to them. The country is going through some fairly challenging and difficult times. I know that not everybody agrees with what I have to say, but this is an opinion, and we live in a democracy where one has to understand that all opinions will not be the same. So what I'm going to try to do today is kind of give my narrative and how I think about it, and maybe you can also kind of use some of the information that I'm presenting to come to your own conclusions. So how this session will happen is that there are a large number of slides. You're not going to be able to absorb all the content that I'm going to show you. Of course, the slides will be made available to you so that you can go through it at your leisure. I'm also going to do some polls so that we make this a little bit interactive. And I'm also going to show you some videos from some previous sessions that Advocata has had with prominent economists. So if I can start today and ask our first poll, Juanita, can you please have the first poll? The reason that we are asking you this question is because it is relevant to some of the other polls that will come later on. So don't worry. I don't think these Zoom polls, you can track who said what. The question we are asking is that, what age group are you in? Because some of the other questions are relevant to this. Okay, so we have, how many people, I don't know how many people finally answered. We have over 500 people who have logged in. So this is somewhat representative, and funnily, it's like more representative of Sri Lanka's population, certainly the adult population. That's good to know. So we have had many decades of macroeconomic instability. What does that mean? So this is a currency. Since we got independence, I believe that the currency was 4 rupees to the dollar, and the official exchange rate is 201 or 202, but it has been trading around 220, sometimes as high as 230. I've even heard figures like 235. But let's assume that it's, the fair market price is about 220. Why is this happening? And if you look at the shape of this curve, it's quite exponential. So something fundamentally is not right. And the second slide shows you that we've been to the IMF 16 times. So over the last 70 years, 42% of the time we have been at the IMF. The colors here signify different types of IMF programs. All IMF programs are not the same, but the more recent avatars, because we have become a middle income country, is called an extended fund facility, which was quite a long program last time around, which ended about maybe 6 months before it was supposed to end. And not all IMF programs have been stuck there, but you can see that from the 1960s we are going to the IMF continuously. So there seems to be something not right. And I had a conversation with Dr. Montek Singh Ahluwalia, who was the chairman of the Planning Commission of India, highly distinguished gentleman. The deputy chairman of the Planning Commission is like a cabinet level appointment for the Indian cabinet. He's an Oxford educated gentleman who worked in the World Bank for many years. Then he worked at the IMF. He was in India, who closely worked with Manmohan Singh. He was one of the architects of all the economic reform that was done in India over the last 30 years. And he wrote a book called Backstage. And I had a conversation with him about a month or two ago. And this question was asked about the IMF. See what he has to say.
When I was in the international independence rally of this IMF, we did a study of countries that were repeat IMF users. Yeah. And this was an interesting study because it showed that many countries kept having an IMF program every 2 years. And that was somehow an indication that something was not right, because the IMF should not be there every 2 years. And if it is there every 2 years, what it really means is it hasn't persuaded the government to put in place a set of policies which would actually lead to a sustainable, stable situation. When I was in the
Okay, so that's what Dr. Montek had to say, that there were some countries that keep on coming. We have been there 16 times. Pakistan has gone 20 times. Maybe there are some few others who have come to our level, but maybe most of the countries much less. I believe India went about 2 times, 2 or 3 times they've been to the IMF. So why are these imbalances happening? And one measure is the current account. So the current account is, it's the flows of what comes into Sri Lanka and what goes out on the current account, as opposed to the financial account, which is the capital flows. And what this is showing you is that the gray bars that are going down is indicative of the current account deficit as a percentage of GDP. And for many years, and you can see that in the 1980s, etc., that some years you had very large inflows. Perhaps it must have been the Mahavali aid programs. That is why it is showing such a large surplus. But, most of the time it's a huge deficit. So we probably have more outflows going out of the country than inflows. And this chart shows you how our trade has happened. So the left says that it's about the exports. So the exports has grown. And if you take the exports, you can see that there has been a significant growth in the red part, which is the service industry. And then you have had remittances, which is in the middle. So those are all inflows coming into the country. But if you look on the right side, that shows you the imports. So it seems to be outpacing both the remittances and the exports that have happened. So something fundamentally is going wrong with the imports, that we seem to be importing a lot more than we are exporting, or the remittances that come in. Because the remittances that come is not a deficit that bridges the trade deficit. It's money in people's households, and it's estimated that 1 in 10 households get remittances, and a remittance household can spend about 20% more. So the problem of Sri Lanka is not that we should make more of the things that we consume. There is a misplaced notion that it's about becoming self-sufficient, import substitution. I heard that number of times on a television program I was on yesterday. It's about getting import substitution, but it's about, spending within your means. And these current account deficits are not coming because we don't produce enough things that we can export, but we are spending too much. So spending is a function of, the disposable income that you have, which is your income minus taxes, or the access to credit. And the taxes basically are determined by fiscal policy, and the amount of credit that you have access to is determined by monetary policy. So let's look at the monetary policy stance. How appropriate has it been? This graph shows you the real yield. So that's the interest rate, the policy interest rates adjusted for inflation. And you can see that over a significant period of time, the interest rates, except for example, the end of the conflict years, certainly the last decade, the monetary policy seems to have been fairly tight, that you're running large real interest rates. So it doesn't seem like this excess spending problem seems to be predominantly due to high real interest rates or low real interest rates. And this table here shows you this savings. So if you're running a large current account deficit, it signifies that you have to import international savings. You have to import savings from other countries. And what this is showing is the second line shows you the current account balance. This is in rupees. And out of this current account balance, we are trying to attribute how much of this saving in the economy is coming due to the government. And what you see in the middle is a figure as a proportion of the current account balance, which is the country's savings. What proportion is coming from the government? Now, if you look at 2020, ignore it because it's a pandemic impacted economy, everything went berserk. So it's not an indication of any trend. But if you look from the period 2010 to 2019, you can see that on many years that this current account deficit is primarily caused due to dissavings that are coming from the government. And the government dissavings is basically the revenue minus recurrent expenditure. It is not the total budget deficit, because what is then invested is considered to be investment, and that is not considered a dissaving. So let me introduce you to the concept of a primary balance. It is the difference between government revenue and non-interest government expenditure. And what that means is the primary balance is the revenue minus expenditure without interest. So if you are evaluating a particular finance minister's budget, you should look at the primary balance because the interest is on debt that person inherited. So he can only control the taxes that he collects for a year and how much he spends on primary expenses. Generally, you should be running a primary balance surplus. And this is what it looks like over the years. So for many years, basically, the pink part is the kind of primary balance that we have been running. And the gray part is the overall balance. So that's with the interest included. So in the early years, in the first maybe 3 decades since independence, we have been running very high primary balance deficits, the part in maroon. And at that time, because the debt was quite small, the amount of interest, which is the gray part, right? And if you add the primary balance and the interest, the total is the overall balance. So in the initial years, the primary balance was dominating the overall balance. But by sometime in the mid 1980s, the debt had started accumulating. And therefore, the balance part of the overall balance was predominantly interest. And, leading up to the current period, you can see that the reason the overall balance is so high in Sri Lanka is the interest has accumulated. And it's interest on the debt that all the time impacts the overall balances of the government. Now, in the year 2017, we had a very marginal primary balance surplus, even under an IMF program. And in 2018, we had a substantial primary balance surplus, which unfortunately we couldn't sustain because we had so many shocks like the Easter bombings that happened in 2019. There was a political coup that happened towards the end of 2018. The currency went into free fall. And then, of course, COVID impacted and all the fiscal measures fell apart. So what is the problem? Is the problem due to lack of revenue, or is it due to excess expenditure? And if you look at these two series, you have in gray the revenue, and in maroon the primary expenditure. Again, the primary expenditure is all government expenditure without interest. And you can see the trend is that both are coming down. And the line at the bottom shows you the primary balance. So we were a country basically that had revenue to GDP close to about 18% in the year 2000. And last year was a record level where we came down to, I believe, 9.1. But the trend has been that it has been coming down. Now, when your revenue is coming down, your primary expenditure is also coming down. Now, your primary expenditure is what you invest, what you spend on healthcare, what you spend on education, what you spend on capital equipment. So if the revenue is coming down, that also is coming down. And this is a computation that we did showing you a normalized index. So nominal GDP starting at 0, so it's not absolute levels. This is the trend though from the year 2000 where nominal GDP has gone. And you can see that the tax revenue, which is also normalized, it has not kept up with nominal GDP. So from about 2006, 2007, the two series have diverted. And the line on the gray is showing you the expenditure, the primary expenditure, which has also not kept up with GDP. So something is happening where basically the economy is growing, but the ability to collect taxes from the growing economy is not keeping up, right? So that is the main principal reason for the drop in tax to GDP. Now, this shows you those statistics that what it was in 2019, which is on the left, and what it is in 2020. This is total government revenue. So there is a tax to GDP of about 8.1% and about 1% non-tax revenue, which comes from profit transfers, for example, from the central bank, other fee-based income that the government collects. And we put some peers. They're not 100% our peers, but regional peers. And you can see that their tax collection, this is across all segments of government, is significantly higher than Sri Lanka. So this shows you in absolute terms the trend, right? This shows you in absolute terms the trend, which is, it had been going up in absolute terms in 2019, and there was a precipitous fall in 2020. If you compare this year, there is a marginal increase relative to Jan to April. Up to June, the figures are out, but the breakdowns are not there. So this year, we are not doing very much better than last year. And we probably end up with the amount of tax revenue very similar to 2020, which is significantly below what we were collecting in 2019. You can also see that we have broken this down into three parts, that there is income-based, domestic consumption-based, and trade-based. So income-based is coming from personal income taxes and corporate income taxes. The domestic consumption-based and the trade-based are coming from indirect taxes. This shows you the breakup over a longer period of time. And if you focus on the maroon part at the bottom, it's showing you what proportion of the total tax collection is coming from income based. So most of the tax revenue is coming from indirect taxes. That is not an ideal. I mean, yes, when you are a middle income country, there is a limited scope for how much of taxes that you can collect from direct taxes. But the ratio that we have in Sri Lanka seems to be extremely low, right? And why you don't want this to happen is that indirect taxes are generally considered to be regressive, which means that the amount of consumption difference between rich people and say middle class people relative to the income that they have, very rich people probably is not going to eat 2 times the amount of food that a middle class person has. Perhaps they may eat different types of food, but the consumption will not necessarily scale with the level of income they have. So you ideally want to tax the rich people based on their income. Of course, there is a limitation of how much direct taxes that you can collect because of the nature of the economy, high rate of informality. But the ratios that we have in Sri Lanka seem to be excessively low. Then let's look at the recurrent expenditure composition. And that has been going on. And even during COVID period, 2020, there was an increase. The main component of expenditure is interest. And if you look at the middle of the graph, you can see the interest component. It's about 38.5% of total expenditure. The salaries and wages is the next largest component, 31%. And then you have other household transfers and goods and services, etc. If you look at in comparison to 2020 and 2021, the amount of spending again is very similar, but this year it seems to have gone up slightly. We don't know what the trend is by the end of the year, but with the continuing lockdowns, etc., and the intense health intervention that has to happen, you probably see that the expenditure is about 2020, which is a significant increase from 2019. So in summary, basically, you have tax revenue that is coming down and the expenditure that is going up. So how does our expenditure measure to our regional peers? And you'd be wondering why these original Ministry of Finance estimates, because what happened is that most of the government finances are prepared on what is called the modified cash method. We don't go on accrual accounting for government finances. But for some strange reason, the government decided to say that there were arrears that came from the previous government, and therefore they were going to adjust it. That some expenditure that was being paid for in 2020 belonged to 2019. So therefore, we have two versions of the accounts. And that's why we have shown original and Ministry of Finance estimates. And then in the middle, in the gray, you see the spending pattern with other countries. And you can see that most countries, the spending has been fairly elevated because of COVID. This is where one item, as I showed you, salaries and wages is after interest about 31 or 32%. So various people are saying that, okay, now the government needs to cut its expenditure. So, okay, interest, there is nothing that you can do about the interest unless you bring the interest rates down, which they have attempted to do. But since the average term to maturity of the government debt is about 5 years, you cannot reprice it immediately. If they are able to keep the interest rates down, then it can reprice over a period of time. Can you do anything about the salaries? So on the left-hand side shows you that as of 2019, there was a salary bill of about 687 billion. The 2020 figures have not been included here because they stopped showing the classification. We could have shown it. It's slightly higher than this amount because there were more people that were employed. And the right side shows you where these people are employed. Now, this is the entire public sector. And on the left side, it is the public service. So the public sector includes all the SOEs. There, according to this, in 2019, there is about 1.37 million people in the public sector, which I believe has gone up to about 1.5 million by now, because there were so many new people that were employed with the new government. Now, when you look at, say, the Tri-Forces, 250,000, the police force, the provincial councils, healthcare workers, look at the number of teachers. It's not going to be easy that you cannot reduce this number of people. Over a long period of time, maybe you can say the military, that there'll be attrition and retirement and then the new recruitments, but you can't get away with healthcare workers. I mean, our whole health system requires all the nurses and doctors and so many others help. And then you have the state-owned enterprises. Of course, there may be some element of overemployment there. This expenditure item basically cannot be reduced. So some of these people are retiring and they're eligible for pensions, right? So pensioners also, basically the quantum of pensioners are going to go up, because our median age in the population for 33 years and climbing. Every 3 years, the median age is going up one. And the number of people above the age of 60 is also proportionately increasing quite rapidly. So pension costs are not going to come. Salary costs are not going to come down, because time to time they are going to agitate for higher salary increases, like you saw in the teachers. So it doesn't look like there is much the government can do to reduce recurrent expenditure. So you take the revenue minus the expenditure, and this is what the deficit looks like. The deficit has been broken down to the primary balance and the overall balance. And relative to so many other countries, India is an outlier. We are running very, very large deficits. Okay. So why is the tax collection so low? Let me give you some explanatory slides. Let's do our next poll. Anita. When it's done, Juanita, you can close it. Okay, so this is very interesting. I should have asked how many people have iPhones, but I forgot to ask that. So the results showed that, I wonder, Juanita, whether you can put the results back on. Okay, so 19% said 5%, 17% said 10, 26% said 15, 37% said 20. The answer is 5%. Now you might ask, why are they so expensive in Sri Lanka? That will require probably one hour to explain. But the reality is that the tax intensity is very low. And it's a luxury good. I mean, it's over $1,000. So the first question you ask yourself is, should an iPhone be taxed at only 5%? Because all phones are taxed at 5%. In London, if you go, the VAT is 20%. In Paris, it's 20%. Singapore, I think the GST is 7%. In Dubai, the VAT is 5%. Right. Juanita, poll number 3. how much is the total tax on a restaurant bill? 17% said 0, 40% said 10, 32% said 18, 11% said 25. The answer is 0. Okay, I think most people have confused the 10% to the service charge. Service charge is not a tax. It is what you pay for the labor. It's a variable charge on labor. So what happened is that after the Easter bombings, they took the VAT out. Or was it done later? I can't remember. Sometime in 2019, may have been towards the end, they took the VAT off. So you can go to the most expensive restaurant in Colombo and eat, and you'll have no taxes. Of course, they have to pay input taxes on some of the input materials. So the value add in a restaurant can be very high. General rule of thumb is that, for example, alcoholic beverages are marked up by 3 times and food is marked up by 2 times. So the value addition would be very high. So this is a graph. Unfortunately, this is a bit dated. I didn't have the most recent results here about countries' tax systems, how they collect taxes. So there are 4 main types of taxes. One is the VAT, the value added tax. One is the corporate income tax. One is the personal income tax. And finally, is the trade tax receipts. So the trade taxes are things like duties, etc. So VAT, now we went for a very brief period of time to a upper middle income country. I think one year we were there, and we came back to a lower middle income country because the threshold is about $4,000. And towards the end of the previous decade, the ratio for a lower middle income country was about 6%. For personal income taxes, a lower middle income country raised about 2% of GDP. This is from an analysis done by the IMF. Corporate income taxes, they were collecting closer to 3% in GDP from corporate taxes, and trade taxes, they were collecting maybe 2% of GDP. So this kind of, the heavy lifting seems to be all in the VAT. All right. Next is they get money from corporations. They also get from trade taxes, and then personal taxes are much lower. So I want to share with you some notable quotes. Taxes are what we pay for a civilized society. In some respects, a civilized society is the rationale for governments in the first place. This is Oliver Wendell Holmes, who was a Chief Justice of the US Supreme Court. And taxes are what we pay for a civilized society is written in the front door of the United States Internal Revenue Service. Professor Mick Moore, who you will hear from, he talks about, in one of his papers, he knows Sri Lanka well. He has come and worked here for over 10 years at the Institute for Policy Studies. He says, societies in which its citizens pay taxes enjoy better governance. So what has been happening to the corporate tax rate? And we did the synthesis on 2 firms. One in 1999, which had a starting revenue of 100 million, and another firm at 50 million. And there were some assumptions of what the margin would be. And based on the corporate tax rate, we looked at what the eligible tax rate is, because it's not the margin that matters, but the revenue, because there was a different rate of taxation by SMEs and different rate of taxes if you exceed a certain revenue threshold. And you can see that for the larger company, because 100 million at that time is a significantly larger, and we grew the revenues at nominal GDP. So the tax rate is coming down. And in the case of a small SME, it significantly came down and it has slightly gone up. So generally over a period of time, this firm's tax rate is going down. We have also gone and given a lot of tax incentives, right? So at the moment we have for gambling, gaming, alcohol, the tax rate is 40% headline. Then it has been reduced to 24%. If you're a manufacturing company, it's 18%. And then, certain concessionary industries is down to 14%, certain types of exports, I think construction, certain types of activities at 14. If you're an SME, it's at 14%. And then a whole bunch of people who pay 0. So this chart here is showing some kind of survey that was done by the UNIDO. And they asked a whole bunch of investors what matters for foreign investment. What is it that you're looking for, right? And if you look at it, incentive packages, the one in light pink is way down the list. So, again, I was on a talk show yesterday and one of the panelists was saying, no, but if you don't give tax incentives, how are you going to compete with investors who are looking to locate in different countries? But this is a survey, and there are many other surveys subsequently. This is something that was readily available, so we put it in the deck. You can see that if you rank it, incentive packages were way below. Other things were far more important. And there is something called the Strategic Development Projects Act. And it says that, the cabinet can award in conjunction with other line ministries tax holidays up to 25 years. 25 years, they don't pay taxes. So if a survey is telling you that, this is not an important criteria, why are we giving tax holidays? Now, this is a collage. I just picked some businesses which had some visual identity. It is not representative of all tax holidays, but to some certainty, because some of these news is in the public domain, these projects have got tax holidays. Now, I ask you, do they deserve to be tax holidays? I mean, these are not tradable sectors. They are not taking products and trying to export to the world. These are all products either are going to be sold in Sri Lankan consumers, or in the middle case, there are harbors, there are terminals inside the harbor. I mean, the ships are coming to Sri Lanka. We are not exporting ships. So my question is, many of these people have been given tax holidays. I don't have the finer details of how long they got for, but they have been given tax holidays. So my question is that if business taxes were the second largest source of tax revenue in most countries after VAT, why are we giving tax holidays? Then I looked at personal taxes. Okay. So what's happened is the trend chart on the top shows you the effective tax rate for an individual. The column graph on the bottom shows you what happens to a person who had a starting salary of 100,000 in 1999. And his salary increased at the rate of inflation plus, I think, 2% real growth over a period of time. And you can see the gray part is showing you the total income that he's drawing. And the pink part is showing the taxes he's paying. So you can see as a proportion, although his income is going up, the amount of taxes he's paying is not scaling up with income. And in the case of the middle one, I'm showing you the case of a person who started at 200,000 rupees in 1999. Now, if you look at the way this thing is inflating, this is a person who is now earning about 18 million rupees. Okay, there's not a lot of people, that's about like 1.5 million rupees a month. So that person's taxes also is hardly increasing. And all of that is shown in the top line chart. So the only people who are going to pay a little bit more taxes are the people on the extreme right, which is people who are not employed, who are only earning income through fixed deposits. And in that case, because they took the withholding tax out, previously you had to pay, I believe, 10%. I can't remember whether it went up to 14%, but now it's at your highest rate of marginal income, which is at 18%. And that is why it is going up. Then I looked at what the tax-free threshold is. So the left-hand chart shows you the tax-free threshold for Sri Lanka over a period of time. And the gray chart, the gray line there shows you the highest income tax band. And the pink shows you the tax-free threshold. The middle graph shows you the income tax bands. So the highest threshold, what the band is, and the pink is what is the lowest band for the first tax threshold. So you can see that the amount of income tax threshold is going up. The headline rate of taxation is coming down. And I took the tax-free threshold basically relative to our per capita. So in the case of the right-hand chart, the tax-free threshold is something like 4.2 times, 420% of GDP per capita. And you can see that on this, of course, the currency has depreciated since these have been produced, so it may be slightly off. But when this was done a few months ago, Sri Lanka's tax-free threshold was higher than the same rupee value of Singapore and Australia's. Right. And Singapore and Australia's per capita income is significantly higher than Sri Lanka. So our tax-free threshold is 420% of our per capita. And in Singapore and in Australia, it's 20% of per capita. So quite literally, when people talk about black money, etc., why high taxes when you're all exempted? So significant amount of the population is just exempted. And I don't have the statistics for 2020, but this is for 2019. And this is from the Inland Revenue's annual report. This shows you the number of taxpayers. So look at the figure about pay, somewhere in the middle of the table on the left-hand side. And it's showing 1.15 million people who paid pay taxes, where the employer deducted it from the employee salary and sent it to the Inland Revenue. This was a sure amount that they would get. They took the pay out. Actually, in the Inland Revenue bill, there is nothing called pay. It's called withholding taxes. That was taken out. Okay. So the total tax income payers were 1.5 million. And look further down about the number of VAT. A person's registered for VAT was about 28,000 or 29,000. I will show you a slide on VAT. This shows you what happened to VAT. Now, I read an IMF paper, and in that they said that this was written about 10 years ago. They said set the VAT threshold fairly high, the revenue threshold where you have to register an establishment. And they said set it between $50,000 and $100,000. So let's assume the currency is 200. So 50 to 100,000 is 10 million to 20 million. And what the top chart shows you, where you have a solid bar, is what the revenue threshold was for VAT registration. So it was 15 million. And when the IMF program started, they reduced it to 12 million, roughly 1 million a month. Towards the end of 2019, now the IMF has recommended between $50,000 and $100,000 globally. We took it to 300 million. 300 million, right? So we took it up by 25 times. And we cut the VAT rate from 15% to 8%. Okay. So look at the bottom chart. That shows you the proportionate contribution of VAT to total government revenue. And in 2020, because of the reduction, it came down. Now, this is how we compare. So leading up to these tax policy changes, Sri Lanka was getting about 3.23% VAT. Still way below. If you remember that comparative chart I said for a lower middle income country, it should be about 5.5%. We were getting 3%. That's because so many activities are exempted from VAT. Like I showed you the example of restaurants, and restaurants were done more recently, but mobile phones for a very long time, it was exempted. I'm showing you comparative statistics for other countries. Vietnam and Thailand, this is from an OECD database, very high. But most other countries with a VAT system, they collect VAT or GST or whatever they call it, basically, they collect fair amount. So our VAT is the least distortionary form of tax. Because you think about it, what this should be. GDP is a measure of value addition. If you apply a tax rate of 15% on entire GDP, you will get 15% on GDP. And if you apply 8% on the whole of GDP, you should get 8% of GDP. But we are getting 20% of the economy. So significant amount of the base is excluded. Okay, so many activities is excluded from VAT. Now we go and tax some items very, very high. Alcohol, cigarettes. Most of these, I mean, the rich people probably buy duty-free alcohol, so they don't pay cigarettes. They don't pay taxes. And the poor people basically buy these things and consume, blue-collar workers. So the tax incident is very high on them. Motor cars. And certain other things also, which are imported because of the huge tariff protection, also has very high taxes. But we don't tax like petrol and diesel. Taxes are very low. That's the single biggest import. Fuel is a single biggest import between $3 billion and $4 billion. It accounts for between 15 and 18% of our imports. But I don't know, for some strange reason, we don't tax that. But we are willing to tax cars at like 200% and say that cars are non-essential, but fuel is essential. This shows you how we tax diesel and petrol. On the left-hand side, it's the amount of taxation that we do on petrol, which is down to about 25%. And diesel, we tax it at about 12%. Actually, because we are selling diesel at a huge loss of about 13 rupees, there is no tax. Net is there is no tax. And this shows you a comparative of what our petrol prices are relative to other countries. So take the example of diesel. We have priced it at 111, and in India it's 242. And India's per capita income on the left-hand side is about $2,000, and we are 3,700. So they are 40% poorer than us on a per capita basis. It's a huge country, but their fuel prices basically for diesel is more than double. And that difference is, it's about 100 rupees to bring petrol and diesel down at the CIF level. Then you have the other costs, and then you add the taxes. So most countries significantly tax fuel, we don't. And it's an easy commodity to tax. So the World Bank did an analysis to see who benefits from these so-called tax subsidies. Tax subsidies is if the incidence of taxation on a product is significantly less than how you tax all other products. And they have shown that the top 10% of households basically benefit something like 35% of the tax subsidy. So the government people or the policy makers may be saying that, okay, I can't send the cost of living high, with the misplaced perception that you are going to help the poor people. But what it is doing is it is helping the rich people for the simple reason that their direct consumption is significantly higher, they're richer, they consume more, they have vehicles. So you are subsidizing once again the rich. And another problem that we have is until very recently, an advocate did send in a congratulatory letter to the finance minister. We never have a proper full-time finance minister. Invariably, the finance minister is either the president or the prime minister. And it's really bad for the top politician in the country to be the finance minister, because basically the finance minister has to be the bad cop, because he's always trying to increase taxes and reduce spending. So you can't be a populist politician being the finance minister. You have to be a very tough, I mean, ideally from the national list, so that you don't have to worry about getting re-elected. But you have to say no. I mean, most of the time you have to say no, because that's the only way you can control the expenditure. And unfortunately, and we have color-coded it as blue and green, it cuts across party lines. Every time the same problem keeps happening. Or even sometimes the people who are appointed are really not fully independent finance ministers. They just do the bidding of their leader. So let's listen to Professor Mick Moore.
Scandinavia, Sweden, terrific. People understand that they need to pay taxes and in return they get looked after. That contract, or those contracts, were built up over many decades, and it takes a long time to build them. And in the case of Scandinavia, they were very much led by social democratic parties who saw this in their political interests. I think the truth about Lanka now is that, had the government many decades ago, or a series of governments, tried to build up a similar connection between paying taxes and getting benefits, then we could have at least some kind of basis of a fiscal contract. But I think the truth is, at this moment, not only has that not happened, but it's very hard to see the basis on which you could create it. Because if you ask the ordinary person in the street, what does the government do for you directly? Certainly, there's health and education, not so bad. Lanka does not have, which is again surprising for a middle income country, a significant cash transfer scheme to help the poorest and the elderly poor to manage. The Samudi scheme is, a travesty of really does very little for this. So it will be very hard now to people to say, yes, government does something. And given the current fiscal situation, I don't see that we have any scope for reasons that Ricardo and Nishan have put forward. We don't have scope now for saying, well, if you pay more taxes, government will start spending more money on transfers or better education. I mean, I think the truth is now that if there's going to be a social contract built up, it's going to have to be a social contract around crisis. Say, look, if we do not do something about tax raising, some very bad trouble. As Professor Alton said, the big bad wolf is tricked upon. You can build up that kind of contract about crisis, but it's very hard to do that when, at the moment, there is no obvious sign of this crisis. I mean, this crisis, if it happens, it's going to happen very quickly. Scandinavia, Sweden.
Okay, so Professor Mick Moore talked about social compact, which means it's a fiscal contract. Citizens pay taxes. They expect their government to give them the necessary services, that there is a level of transparency, that they feel that their money is better used. And the problem in Sri Lanka is that, when you go and exempt so many people from the tax net, I mean, how is that social compact going to exist? Because all of us are voters, right? So if you don't feel that some money is coming out of your salary, that you're paying taxes, how are you going to hold your politicians accountable? So we have huge challenges. Then also Professor Mick Moore, as I said, he's been studying Sri Lanka for more than 10 years. He's a senior research scholar who has come many times to IPS. He's written many papers. Anybody else who is interested in his work, you can just Google and have a look at it. He talked about the Samurdhi program. This shows you how much of this money, right? So we are spending at the moment close to 3 trillion in government expenditure, right? About 1 trillion is going into interest. This shows you that the Samurdhi is only 52 billion. It has gone up significantly. Out of the 2 trillion of primary expenditure that we spend, 1 trillion is interest. That's how you get 3 trillion. It's only 2.5%. So the problem is that if you want to help poor people, the best mechanism is to use the cash transfer mechanism, that you just give them the money. Okay. So there is this misplaced perception that if you give poor people the money, that they will drink, etc., then you give it to their wife. So that leads us to what is going on with the country's public debt. Now, I showed you this previously, that we were running very large fiscal deficits, right? Now, what happened to these fiscal deficits? This happened to it. This is the trajectory of our debt. And it's an exponential function. That's why all the debt that you see from long time before doesn't really show up here, but that debt was accumulating. It's compounding. And anybody who has done any kind of compound interest analysis will understand is that, after a while, the debt starts compounding. So the question is that, can you grow your economy faster than the rate at which the debt is compounding? This separation here is between the domestic debt and the foreign debt. And you can see that it has been equal all along. And then last year, there was a lot of monetization from the financial system, not only the central bank. So this composition has slightly changed. And so far, they've been holding the rupee. This foreign debt at the end of 2020 is valued at 185, I think, to the dollar. It's going to be a lot more with the current exchange rate. And this is an attribution analysis to show you what is driving the increase in the debt. So over this period of time, up to 2020, the interest, the accumulated interest in the net differential, right? So the debt was something like 16 trillion or 15.5 trillion, 14.5 trillion has come through interest. Okay. So it's the interest that is accumulating. You're accumulating and it's compounding. And then the exchange rate effect, because some of the debt is in foreign currency, about 50% was foreign currency. It's not only foreign owned, because there's foreign currency debt that is owned by residents, like the banks. That's not a small number. That can total up to about 4 to 5 billion. And then you have the exchange rate variation, because when the currency depreciates, there's a translation loss. And then the financing of the primary balance. So when you run a primary balance, that also gets accumulated in the debt. And you can see that for many years, the main driver was the interest and the exchange rate effect. But the last few years, because you're running such huge deficits, basically, that the primary balance is also adding to the debt. Now, I know that there's a longer, wider audience. So I won't bore you with the algebra. We do have some maybe mathematically inclined people. But if you do an attribution, which means like a separation between the ratio called debt to GDP. So you have a numerator on the top and a denominator on the bottom. And if you see the drivers of what drives the numerator and the denominator, you can open it out. You can expand it into these impacts. So the real interest rate effect, so that is adjusted for inflation, because growth is also basically adjusted for inflation. So ideally, this concept called R minus G, what you want to do is you want to make R minus G negative. If your real growth rate is more than your real interest rates, you can grow out of the problem. Okay. Then you have the exchange rate effect, that if your currency starts depreciating because some of the debt is in foreign currency, the debt will go up. Of course, it helps the GDP also, because some part of GDP is also denominated in foreign currency, like your exports. Then you have the primary balance, that if you are able to put a primary balance surplus, you can reduce this debt to GDP. But at the moment, we are running huge primary balance deficit. So then that is further adding to this debt to GDP. And then you have something called residuals, which is partly the combined effect of some of these other attributes. Plus, you can have certain debt that does not flow through the fiscal account that suddenly gets added up. And you do this analysis and this is what it looks like. So the graph on the top shows you the trajectory of debt to GDP, that it is going up. And the stack column shows you the components that are driving it. And what's happening is because the growth has collapsed. So if the growth is going, it will pull this down, right? Because the denominator is also growing. But what's happening, last year there was a contraction in GDP, which is, I think, never had such a huge contraction in GDP nominal terms, because it was like a once in a 100-year event. But this debt is basically just going completely out of control. So it's completely destabilized, that it's just growing too fast. And you can assume that 50% of the debt is owned locally and 50% is dollar denominated. So who owns the debt, domestic debt? So some of these domestic debt is also in dollar denominated. Significant amount is in the commercial banks. And the next biggest thing is the provident funds. And the central bank, although there are a lot of accusations that they are monetizing the debt, still there has been an increase. There's been a significant increase, but the bigger increase has come through the commercial banks. And this is the foreign debt. So this is not foreign currency denominated debt owned by non-residents. And you can see that for many years, we were borrowing from the World Bank, from the ADB. So it was bilateral. We were borrowing from the Japanese, etc. But over the last decade, we started borrowing from the markets in bigger and bigger components. So this is what we call the financial market debt component became bigger and bigger in our debt profile. And in addition to the debt from the central government, there are other foreign liabilities. People like Mr. Vijayawardena have written about this, that there are private sector debt, there is FDI. And if you put all of this together at the end of 2019, the entire foreign liabilities of Sri Lanka were more like $60 billion. Of course, some of these things are FDI, foreigners, like for example, Dialogue owning, Asiata owning, I don't know, maybe 80%, 85% of Dialogue. All that is inside this direct investment component. So they are not going to go away from Sri Lanka, but it's a foreign liability. We have to pay them dividend, holding company, loan interest. That also goes out of here. But this is basically, and the private sector debt is also here. Some of the banks have borrowed, some private companies have borrowed from overseas. Now, there was a debate, I put this in because there was a debate. I think the state minister was saying that, at the end of 2014, basically, there was only $5 billion of ISPs. And at the end of 2019, they were talking about $15 billion worth of ISPs, but we only found 14 billion. And if you take the sum, this is what it is. So on the face of it, that is true, basically. And $2 billion was raised for debt management affairs. So they raised extra amount of 2 billion after the Debt Management Act came to pay for some of the maturities coming up in 2020. But actually, if you look at the foreign indebtedness, there were other instruments before that. So one was that there was a lot of foreign investors basically who had come into Sri Lanka using government securities. So people like the famous Templeton investors, etc. At the end of 2014, there was close to $3 billion of that stuff in it. It yet belonged to foreigners, rupee denominated. So as you can see here, that went. That exited. And what was happening is there were also proxy borrowings, like NSB raised $750 billion. I think the Bank of Ceylon borrowed $500 million or $1 billion on behalf of the government, and they swapped it with the central bank. I think DFCC borrowed $100 million. So this whole narrative, yes, the instruments that were used have changed, but the debt was already there. It was quite significant. Of course, it did increase because the economy also had been growing, but it is not as large as it was put across. So as I have continued to say, this is a problem that came from 50, 60 years ago. And no one government can accuse another government that you are responsible for this. This has been coming over many generations. And then you take the rating, right? So this is what, when we started accessing the international markets, this is what our rating was like that. And now it has come down to CCC. CCC means, according to S&P, that there's a 42% chance of a selective default within 1 year. And ever since COVID started, and then our rating, I think there was a rating warning, our international sovereign bonds. So there are many different bonds here. I've shown 2022, 2025, 2030. There has been a significant price correction, right? So then more near term has corrected less because the expectation is that because government has said that we will keep on settling this, the price correction is a lot less. And for the longer maturities, they have significantly gone down. So this is the international markets, and about $13 billion of this stuff outstanding. They are signaling to us that we don't think you're good for the money. So let's listen to Professor Ricardo Hausmann. Some of my analysts have been sending me feedback that the volume is not clear. I think you have to increase the volume at your end because maybe the embedded volume on these videos are lower. So please increase the volume at your end.
I come from a country that has seen debt crisis. I come from Venezuela. But for 7 years, I was the chief economist of the Inter-American Development Bank, which is like the Asian Development Bank that has 26 borrowing countries. So, and pretty much, I finished my PhD in 1981, just in time for the 1982 Mexican debt crisis that transformed into the 1983 Venezuelan debt crisis. I have seen debt crises too many times. I know what it looks before it happens. I know what it looks when it happens. I know the damage that they can cause. So for me, this is not a theoretical issue. Now you might say, before the crisis, before you get into trouble, different people are seeing different things. There is this old story of Little Red Riding Hood. Somebody tells her, who's afraid of the big bad wolf? And just doesn't believe that there's such a thing as a big bad wolf. And I just want to tell you that I've seen the wolf. I've been bitten by the wolf. I know the wolf. There is a wolf. I come.
Okay, so Professor Hausman is talking about the big bad wolf. So let's see whether this big bad wolf is going to come. This shows you the gross financing needs. So since we have a lot of CFAs also in the audience, so it's not about the net borrowing, it's also about the refinancing that happens. And one problem that Sri Lanka is having is its gross borrowing requirements have exploded. And which used to be about 15% of GDP has now gone about 20%. So we have large amount of maturities that are coming both in domestic securities because they started issuing more and more treasury bills. The composition between bonds and bills, they got more and more skewed to bills. So because we have a large amount of debt securities that need to be refinanced continuously, under a crisis situation, it gets more accentuated because something goes wrong in any 1 week and the government is vulnerable. And you can see that there are repeated treasury bill auctions that don't get subscribed. Maybe they're trying to hold the rates down. But this is not a healthy situation. This is really a disastrous situation that you get into it because you then come up on very large liquidity shocks. Now, if you look at the gross financing needs of countries like Thailand and Malaysia, they're significantly lower than us, right? So they have more benign debt dynamics, but we are basically at very, very elevated levels. And this basically is the absolute levels based on some projected models. It's going to remain at very, very elevated levels, about 3.5 trillion rupees a year. And this is again a probabilistic model because it's very difficult to figure out what your debt to GDP is going to be going forward. So how this happens is this is a debt sustainability analysis is kind of a framework that has been developed by the IMF and the World Bank. And this is a methodology to forecast what your debt to GDP should be. Now we are over 100%, we are heading to 110%. I mean, the safe level for a middle income country like Sri Lanka is about 75%. So we are way, way above that. And these fan charts based on probabilistic assumptions shows you the range where your debt to GDP is going to head. And even the most optimistic scenario is way above those safety levels. Okay, so you can make some assumption changes in these scenarios that we have taken about the growth shock and the exchange rate shock. Actually, the exchange rate shock is far more, or we have adjusted recently. This outcome does not look very good. And we talked about gross financing needs, and this kind of shows you the trajectory of future refinancing requirements. Focus on the bottom, that shows you on the debt securities. So even in 2021, we need to refinance $4 billion. In 2022, $4.5 billion. That doesn't seem to be a reprieve. So if you say that if I can last another 6 months, if I can last 12 months, I'm over the hill. It doesn't look like we are over the hill. And this is what has been happening to our reserves. So the reserves have been falling. You know, it's in the headlines of the papers. It went down to some $2.8 billion. And then we got courtesy of the IMF, something close like $800 million of special drawing rights allocation, which we have converted into US dollars, which has gone up. But at the end of July, the central bank, they publish every month what they call predetermined reserve drains on foreign currency. And this 261 million is what should have gone up in August. Now we know the figure at the end of August, we have 3.5 billion. This updated table will come in about 10 days time. Okay. But we know that over 12 months that we have to pay predetermined on government liabilities close to $7 billion. Right. So from the 7 billion, 6.985, if you remove the 261, you're still left with about $6.7 billion that has to be paid out in the next 11 months. Okay. So the question is at 3.5 billion, how we are going to pay? So there is an expectation of new flows. Okay. So there are swap lines. We have got some more swap lines, the Chinese swap line, $1.5 billion, which I believe is only in yuan. You cannot convert it into dollars. So they have not drawn it down and it's supposed to be quite expensive. So you have something like a $3.4 billion shortfall. Okay. And in terms of months of imports, we have only about 2 months of imports. Let me play you something. Now we don't have reserves, right? What can we do? Let me show you what South Korea did.
For those who lived it, this was an unforgettable display of sacrifice and patriotism. Hit hard by the Asian financial crisis, South Korea's government asked the IMF for a $58 billion bailout, and the country wasted no time getting to work on paying it back. Millions donated precious family heirlooms to be melted into gold bars. Park Jun-hee was one of them.
I didn't hesitate to donate gold rings I got for my children's first birthdays and gold bands I got for my wedding. I was ready to give those up if it was going to help my country overcome the crisis.
As a financial crisis swept the region, it became clear South Korea had built up crippling foreign debt. Imports exceeded exports by more than $20 billion. It was a shock for a population that had been enjoying a booming economy just the year before.
People have been fired, and a lot of, especially in the financial area, a number of small banks has to close down.
The gold went some way to helping, even if largely psychologically, and thanks to economic restructuring and currency movements, South Korea bounced back, repaying its debt to the IMF in about 3 years.
Okay, it's written somewhere that they collected 230 metric tons of gold. At today's price of gold, that came to about $18 billion. Okay, so Sri Lankans also like a lot of gold. Certain communities have more, but all of us probably have gold at home. So my next question, Juanita. So the question read, one way to raise our foreign reserves is for our citizens to sell their gold to the central bank for rupees. 3 options. I will sell my gold to the central bank to help them build their foreign reserves. Buy more gold if I can, for the central bank is debasing the rupee. Do neither. Okay, so 50% say neither. About 395 people are voting. 22% say they're going to buy more gold, which means that it will make things even worse. And sell my gold to the central bank, 28% are saying that, which is an amazing outcome. So I didn't expect that, but that shows, the citizen civic responsibility that 28% are willing to sell. Of course, I didn't say what price, etc. I'm presuming it's a market price. So this is something that perhaps we can think of. I don't know. I've always asked people, do you have an estimate of how much gold we have in Sri Lanka? And some of the people who are operating in pawning, etc., they say that, okay, in 2012, we had like 600 billion worth lent out. So I don't know what that figure is, but that's an interesting analysis. That is something that we could do. So is the big bad wolf on the way? Ricardo Hausmann talked about Red Riding Hood and the big bad wolf. So let me give you two definitions. There is a liquidity crisis. When a country's liquid assets and available financing is insufficient to meet or roll over maturing liabilities. Then you have a solvency crisis. When a country's capacity to meet long-term financial commitments is compromised and financial obligations cannot be met without renegotiating terms of debt, an implausible large fiscal adjustment, or simply defaulting. Okay, next question. Juanita. So interestingly, we had zero. 2 people said no crisis. 12 people out of 449 said, I don't know. 35% said liquidity crisis and 62% said solvency crisis. Because it's interesting that the kind of approach that you take to deal with the liquidity crisis is very different to a solvency crisis, right? So liquidity crisis is, can I buy time? I'm not insolvent. I basically need time to get liquid assets to pay my short-term liabilities. Solvency crisis is that over a period of time that I'm insolvent. So as the definition said, either you need to do a debt workout or you need to do something fundamentally different to become solvent. Let's go on to the banks. Now, the deposit growth has been significantly outpacing loan growth. And when I say loan growth, that is what is given to private sector loan growth, except there's an outlier in Bank of Ceylon where basically the loan growth has far exceeded the deposit growth. So when this happens, you will have loan to deposit ratios are coming down. So the ratio so you are not reliant on wholesale funding. You have a lot of deposits to fund your loan book, right? So you have excess deposits, you can reduce interest rates. You're in a very, very healthy position. And you can see almost every single bank, the loan to deposit ratio is falling. It's actually now called loan to credit ratio. And because the loans are coming down, the liquid assets have gone up significantly. You have NSB in the middle, that's an outlier because 60% they have to invest in government securities. The dotted line shows you that this statutory liquid asset ratio, which has to be about 20%, the definition is that you have to keep 20% of your liabilities, interest-bearing liabilities in liquid assets. And then there's something called the liquidity coverage ratio, which comes from Basel III, which is how much a liquid assets. There's a different methodology of calculating what's a liquid asset meets your next 1 month's liabilities. So on this scale, it looks extremely good. And this shows you the financial system, how it has grown. So there has been an expansion in the monetary base, the M2B, and what are the components that contributed to this expansion? you can see that the private sector credit over a long period of time has hardly grown, right? And it's in the middle, credit to SOEs has been going up. I don't know whether this is partly to do with because people like the CPC, etc., borrowed in dollars. So when the currency depreciates, then that rupee value also goes up. Part of it could be a translation effect, part of it could be volume growth. A significant amount of growth in the monetary base has been because the banks have lent to the government through ownership of government securities. So you have seen these very high liquidity ratios. One of the reasons is because the banks have parked all the excess savings which are not going into private sector loans with the government, because the government is the biggest borrower. And as I showed you previously, the tax base has collapsed and therefore the spending has not come down. So they have to keep borrowing. There's a lot written in the newspapers about the central bank monetizing the deficit. Yes, there is a lot of subscription to the primary in the primary market, but the light pink shows you that growth. And you got to look at the net foreign assets of the central bank. So since the reserves are coming down, the net domestic assets have to go up. Otherwise, the reserve money has to contract. And the biggest component of reserve money is currency. So if you want to contract reserve money, you have to take all the currency in circulation also out, which then you have less currency for transactions, and then that has a huge problem. So the fact that we have a reduction in our reserves is a worrying case, because your reserve money is not backed by hard currency. But the biggest proponent who funded the government is through the banks. So if you look at the reported capital adequacy ratios, they're extremely healthy, right? So the dotted line shows you the minimum tier 1 and the tier 2 ratios. All the banks are way above the minimum required. But the banks are still leveraged. The leverage ratio has not come. Most of the banks are close to 10%. The two state banks go up because any lending to the government is zero risk rated. So they have always been operating at very high leverage. But most of the private sector banks, they're about 10. And one reason their capital adequacy ratios are fairly healthy is because they are holding this large amount of government securities. The credit risk on that is zero, right? So because the credit risk is zero, if you take the total risk-weighted assets to total assets, that ratio is coming down. And you can see across all the banks that is coming down, because a significant amount of the assets are now in government securities that are zero risk-weighted. Now, if they lend it out to say a company, they probably have to put 100% credit risk rate. Now, the problem is that in these liquid assets that they have, they hold dollar-denominated Sri Lanka government securities. These are not small amounts. So the Bank of Ceylon has about $1 billion, right? Comprising of Sri Lanka development bonds, which is an instrument that's issued as a form of a paper certificate. We've been having these instruments for maybe close to 10 years. Periodically, it gets reissued. Banks hold them. Private citizens also can buy them. And then you have these international sovereign bonds, which are shown in pink color. So you have maroon and pink. And if you add the two, we have highlighted the bigger banks. So the Bank of Ceylon has about $1 billion. Commercial Bank has $711 million, and HNB about $791 million. I don't know what, we have just made some assumption of those July 27 maturity, but it may be plus or minus some, maybe 10% off, but roughly this is what they're holding, which is a sizable amount. So what you see as the other value is the rupee value. So in the case of HNB, it's about 159 billion. In the case of Commercial Bank, it's about 143 billion. Now, if the currency goes this way, that way, then these values in rupee terms will change. Now, what have they done for the provisions against these instruments? Now, as per a circular, the probability of default they have to take is 10%. And the loss given default is 20%. So if you default, you'll only lose 20%. The probability of default is 10%. So the PD into LGD gives you 2%. So as per the circular, all they have to do is provide 2% of that value as an impairment charge. But on the right-hand side, I have put a table of what these instruments, especially ISBs, because SLDB is hardly traded. It's not electronically traded. So it's a proxy to the risk. They are trading at a significantly lower value to the $100 that it was being issued at, right? So, the question is that, is the left side right or the right side? The right side is basically a market determined measure, and it has been down like this for the last maybe 14, 15 months. Right. So this is one concern, that which side is going to be right. For the sake of the country, let's hope that the market is all wrong on the right side and the left side is right. Then we asked the question, there's been a lot of credit expansion over the last decade. Where did all this money go? So this area chart shows you the growth in credit. And you can see the big one is construction. Okay, so large amount of money, credit expansion happened to construction, the real estate sector. We had so many structures getting built in Sri Lanka. There's also been a lot of personal loans. Right? So credit expansion has happened in the economy. Now, I don't have all details of where all this money went, but significant amount of money has been lent out. And this is just a collage of, for example, the type of things, the landscape that when you go around the city of Colombo, you see significant amount of construction happen. And land prices have also gone up significantly. This is the central bank index in the Colombo district, and maybe in some places in Colombo city, probably it has gone up more. So over this period of time, 222% increase. Now the problem is that this is a figure snapshot from the banks because of these repeated moratoriums. Some of these moratoriums may have been going on for even 2 years. Some of them from the Easter bombings, April 2019. Now this is September 2021. There are lots of loans that are under moratorium. So some of them, they have been servicing interest, some of the tourists, because they've been turned into hospitals, etc., intermediate care centers. But these are figures that the banks publish, basically. And you can see that they are sizable amounts. So the question remains that whatever they are providing, whether it is going to be sufficient. And the market, this is a Sri Lankan stock market, which is not always very efficient, but it is kind of pricing in significant erosion of capital. It's a price to book value. The banks are trading at a significant low discount. And, the perception is that, the Sri Lankan market is trading at a very low P. And they say, some banks are trading at 2 times, 3 times, 4 times. Of course, if you don't do all the right kind of provisioning, the reported earnings can be significantly higher. But, this is a worrying concern. Why is the market pricing these banks at less than 50% for most for over 1 year? So it can't be a kink in the market. The collective wisdom of the market is signaling us that something is not right. So what's going on with the exchange rate? And it seems to be flat here, but that's because of moral suasion. The interdealer market basically cannot quote. They can only quote within a narrow band, right? So the narrow band is between like 197 to 203. I may be wrong, but something like that. But that is only between dealers. There were no restrictions about between banks and their customers until a recent circular came out maybe last week saying that do not pay more than 203. So obviously, the volume has all come down because, if the market was assuming that currency would trade at 220, how can you trade at 203? The market will cease. And because I don't have a lot of statistics, that always, if you take a forward premium, it was, if you say that I'm going to sell you dollars in 3 months, you would always get a rate better than what you get today. But this has inverted, which has never happened. And one reason why it has inverted is suddenly what happened is that the dollar interest rates in the economy became higher than rupee interest rates. So one of the questions people ask me, and the bottom graph shows you the amount of volume in the intermarket, which has also come down significantly. So so many people call me and ask, oh, these miserable exporters, they are not converting the dollars and they are creating the crisis. My simple answer to them is that they are not converting the dollars is because somebody else is paying them an interest on these dollars. So the problem basically is that if they convert the dollars, whoever was using these dollars is no longer going to have these dollars. So then what, since the banks are restricted in having very large net open positions, if they have lent these dollars to somebody else from which they were earning some money and paying the deposit at a very high interest rate, the banks don't have the dollars. So their balance sheet will be having a huge gap. So, trying to manipulate exchange rates is a futile exercise. And if you look at the real effective exchange rate, which is an indication adjusted for inflation, because the currency has been going down and the US dollar has been weakening, this is indicative that it is coming down. And funnily, in the last few months, inflation globally has gone up. India, which is a big trading partner, etc., the inflation rates are much higher. So because of that, the deterioration in the rear has been a lot less. So we have to see what our inflation rate is going to be going forward, because we have a lot of administered prices like fuel and electricity, etc., that has to be revised. So I'm coming to the final part of my presentation about what drove growth in the past, because one way out of this crisis is if you can grow your economy faster than your debt stock. So over 10 years, these are the sectors. I don't expect you to understand this graph. You can have a look at it later. The middle line is basically your average. Now, just focus on the big part. These are the fast growing sectors in the economy. Okay, these were growing much faster than the average, and these ones on the right were growing much slower. So the things on the left are, say, they are called non-tradable sectors. So if you borrow a lot of money and you have a lot of credit expansion and you grow your non-tradable sectors, basically, you will be able to grow the economy. But your tradable sectors is from where you can earn foreign exchange and your competitiveness of your economy. So those sectors are not growing, but the non-tradable sectors are growing. So therefore, you are sucking in money from overseas and you are not competitive, and therefore you are unable to export to make up the imbalance, right? So, this is a characteristic of our economy. And over the last 4 to 5 years, we have had multiple shocks. Starting in 2016-17, we had weather shocks, big droughts. That slowed the economy. Then you had this constitutional coup. Again, in this quarter, the growth fell. Then you had the Easter attack. Again, the growth fell. And then, of course, you had the pandemic. So you had, continuous back-to-back shocks. So over a period of time, your economy is slowing, and then it started going negative. So there were very unique factors, starting from like the mid-90s, leading up to about 2012, 13, that gave you, in spite of a conflict, in spite of so much of mismanagement, you kept going. One was this economic demographic dividend. So you have a bulge, you suddenly had a bulge in the young population. So there were a lot more people who attained the age of 20 who were able to get into the workforce. Okay. So this economic dividend or demographic dividend significantly expanded the number of people available for work. But what's happening is, going forward, the people are going to start aging. And this demographic dividend, you can see we are in 2021, is almost over now. So we are not going to get a boost from this expansion in the working age population. Second thing is, when this demographic dividend happened, we were able to export a lot of our people overseas, right? So at the peak, I think we are estimating about 1.7 million people went home. And those people were better skilled. They went to different parts of the world. The remittances basically increase exponentially. But it has kind of tapered off. And you had what is called spatial transformation. So this is a map of what the urban environments look like in 1991, and then it grew and it grew and it grew. So now that's why you have so much of congestion in the Western province, movement, etc. So this kind of spatial transformation that you had, you're not going to repeat again. Maybe you can have more densification, more tall buildings, etc. But this was a tailwind that we are not going to get again. And most people got mobile phones, so the connectivity improved, and more people have got internet connections. So the coordination, the WhatsApp, finding prices, coordinating activity, all those benefits came and helped the productivity of the economy. Mobility increased significantly. So there was an expansion in the road network. Of course, things became much smoother, nicer, tarred roads, but there was an explosion in vehicles. So if you go to every nook and corner of Sri Lanka, people have motorcycles, trishaws, nobody is going around in bicycles anymore, carts. So that whole mobility that, the population can move. Of course, if people go from a motorcycle to a trishaw, from trishaw to a car, his utility is improving. He's going in air conditioning, he doesn't have the dust, but he still can go from point A to B. So in terms of functionality, now that everybody has got mobility, you're not going to get a mobility boost going forward. So what I'm saying is, what helped us in the past is not going to help us again. And what helped us in the past, in spite of a conflict, there were certain changes that happened in our economy that were unique. Those are not going to repeat. So just saying that, oh, before the war we grew at 5%, why can't we grow faster? That's not going to work. And very quickly, there are two things that can make your economy grow. Either you increase the number of people who are working in the economy, or you get more output from a person. And this is a simple equation. Please focus on this. So the profit is a function of what's called price recovery into productivity. The price recovery is the output price that you get divided by the input prices that you pay. So if this price recovery function starts expanding, that can contribute to your profit. But you don't want this to go up too much. And this goes up because of, say, inflation, macroeconomic instability, so that, you get a short-term advantage that inflation goes up. You can sell your product at slightly higher level. The salaries don't increase for 1 year. You get a small advantage, but it's an advantage. Then low contestability, like you don't allow imports to come. You put very high tariffs. You don't allow competition to come. You don't allow, this is not good because the consumer ends up paying more. Or product and factor market rigidities. You can't hire and fire people. It reduces competition. They give licenses only to a few people. They don't allow other people to come in. So that's not good. Economists don't like that. What you want is productivity. And productivity comes about by competition, innovation, technology, skills upgrading, business transformation. Because then you're producing more with less. And this is from the World Economic Forum, how our competitiveness is. Okay, we are 84th in the world. And on certain measures, we seem to be good. Human capital, health, skills, we are not too bad. But in certain criteria, we are really down. Okay, so product market, we are 131. I think there are 141 countries, we are 131 in the world. Labor market, 118. So if we are going to, and macroeconomic stability, 118th. So if we are going to make a dramatic change in our future, we have to improve these things. And I wanted to show you the trend in product markets and labor markets. The product market has completely, and in trade openness, because of all these restrictive policies, no imports, huge tariff protection, we are 140 out of 141. One before last. Of course, somebody can criticize the methodology, etc. Yes, but it's a methodology that is applied to the whole world. And it's made by the World Economic Forum, which is a highly reputable organization. So I'll show you how protectionism works. This is a selection of construction items. This is the border protection. This is the kind of protection, the amount of duties and taxes which is without VAT, right? Because if you're a domestic producer, you still pay the same VAT as an import. And this is adjusted because the VAT comes right at the end. I mean, things like ceramics, roofing tiles, the border taxes are 75%. So if you're a domestic producer, you have a huge protection against content. And if you have 1 or 2 producers in the country and you have to be fearful of imports, no imports are coming. So, you can have, it's very easy to make profit then. So that is that price recovery. It is not coming on the back of productivity. You're not competitive, you're not efficient, you're not better, you're not innovating. You are just being very, very comfortable that foreign competition cannot come. So you will never improve as a country. And over the years, because of all these growth shocks that we are having, the investment rate has come down. Right? You can see in absolute levels, the investment rate is coming down. And this is as a percentage of GDP, this is also dropping. So if you want to grow faster and faster, so there are projections, okay, there will be a rebound after the pandemic, and there will be a recovery in tourism, etc. But if you want to keep sustaining to grow, what you want to take out in another 3 to 4 years, you should be investing now. The investment rate has come down. So for the next 5, 6 years, you are not going to be able to grow very fast. You can't, like a light bulb, switch it on, it won't go. You have to keep on investing. Over a period of time only you can accelerate. So the Harvard team did an analysis to see what is holding back investment, and the results were this. And the MCC program, which we said no to $480 million, what they call the binding constraint, they said land is a problem, political uncertainty, taxation is a problem, transportation. And that's how they designed that $480 million. I think about $65 million for improving land records, digitization, accelerating BIM Savia, transportation, smart traffic lights, certain passive interventions between the Western province and the other provinces. But unfortunately, for reasons that I don't know, we said no to them. So let me do a poll again. Juanita. So let's see what we can do. Okay, one way to increase economic output, we all know that there are a lot of holidays in Sri Lanka. We could, either work on the Saturday when a holiday comes on a weekday, work on the holiday, or say, no, we don't want to work. Let's see what our people have to say. Okay, I am really surprised. I am really, and you have made my day. Only 22% said, I don't want to work. So how many people have, okay, 288 people. So quite a number of people are saying that if a crisis comes, they are willing to work 5 more days. Working 5 more days. Of course, you have to assume that the whole economy works. You just coming to your office and working is not going to help. But this is one low-hanging fruit that we can. And for many years, Japan, after Second World War, they used to work a 6-day week. That's how they rebuilt. So these are the holidays. Another problem we have is that we have a lot of large businesses, but we also have a lot of small businesses. And a survey was done a few years ago. They said there was about 1 million establishments, and 92% was very small, 4 people or less. And they employ about 44%. So the Podiminiha, they were talking about this in this panel, the small guy, you got to lift his productivity. So things like Pick Me, etc., they have significantly improved productivity in the Trishaw market. But like that, we got to have some platforms, etc., how to improve productivity for the small firms. Of course, we have to encourage large firms, because large firms by their very nature are far more productive, but we have to find intervention measures of increasing productivity of small firms, micro firms. What else can we do? The average coconut tree in Sri Lanka is 62 years old. 62 nuts. Best practice is you can get 100 nuts. The average coconut comprises 20% of arable land. The average coconut tree is 50 to 60 years old. Similarly, in tea, in the plantation sector, the average tea bush is over 60 years old. The most optimum period basically for tea production is between 20 and 40 years. So if we focus on basic crops, right? Unfortunately, we have decided not to allow fertilizer. But if we get the productivity up of our basic crops, that will move the needle much more because it's a brownfield sector, it's large. And although agriculture is only 7 or 8% of the economy, when you do all the value addition, so this, when you say teas, you're only measuring up to green leaf. So all the other value addition that happens in the primary industries, it's about 20% of GDP. So I'm not a guy who says that, we need semiconductor factories and we need car factories. We need to focus here, because there's a lot more people employed in these industries. And if we can lift the productivity by good agricultural practices by 20%, it will really move the needle. And the exportable surplus on the back of the envelope calculation is about $400 million. Exportable surplus, right? After paying for inputs. This can move the needle significantly. This is what Thailand looks like in terms of its exports. So it exports a lot, it imports a lot. It sends goods all over the world. Increasingly, it sends a lot to East Asia. This is what Vietnam looks like. Right? And a lot of its exports are stuff it never had 10 years ago. This is again where Vietnam sends its exports. A lot of it to East Asia, China, etc. This is what Sri Lanka looks like. And Sri Lanka sends most of its stuff to the West and imports most of its stuff from Asia. Very different to the other countries, right? I'll go back. Vietnam imports a lot from East Asia, exports a lot to East Asia. It is also sending to the West. Sri Lanka, most of the trade is going to the West, but imports are all from Asia. And contribution to economic growth, bottom is Sri Lanka. Exports, nothing to GDP. But in Vietnam, it's a significant contributor. 15-20% of its economic growth is coming from its export machine. And one problem Sri Lanka has, and this is something the Harvard people did over 15 years, in our export basket, we have only added 7 new products. We are exporting the same goods. While other countries have added, so the diversification of the export base is very large. So that is driving exports, that they are having more and more things to export. Final statistic. Everybody thinks the tourists will come back and the country is safe. You have to be very careful with statistics. Let's take 2018. It is reported that we got, look here, 2018, $4.38 billion of tourist receipts. How is this figure calculated? So we say, oh, the tourists will come back and we'll get many billions and this problem, our balance of payments crisis will be over. In that year, 2018, 2.33 million visitors came. We know that for a fact because the immigration system computer will tell you every foreigner that comes into the country, you have to go in through the check gate, and when you go out, your passport is stamped, they put it in the computer. So we know with high accuracy, this figure is right. Guest nights is 10.8. We know this is also right because you know when they came, you know when they went, right? The multiplication of this by this will give you the number of guest nights, right? You multiply this, it will come to like 25 million. 2018 was the high water mark for us. There is a survey of about 1,000 people at the airport, and they asked them how much you spent a day. That amount is $173 estimated. Now, I've been on a hotel board. And they give a breakdown here that $100 per person for food and lodging. There is no way that an average tourist spends $100 a day. So if two people come, that's $200 on lodging and food. No way. So, you have to be very careful that this figure is an estimate. That this whole tourism industry is, in my opinion, slightly overstated. That it is not as big as, it is very important. It has huge trickle-down impact to the economy because a small man helps. There are a lot of small enterprises that participate, but don't take comfort that the tourists will come back and our balance of payment problems will be solved. What happens is that in order for this figure not to be skewed, an estimate is made of the tourist outflow. That is the amount of Sri Lankans going abroad. So I'm presuming a similar methodology is taken and an estimate is made to spend. And that's how this net figure is calculated. So this net figure is more representative of the trend. Don't go by this headline figure. Should we go to the IMF? I'm come to the end.
I'm not sufficiently expert on the Sri Lankan situation, but I did take a look at some of the data just to be a little familiar. And I can see the similarities in the sense that you have a large fiscal deficit, you have a worrying decline in the tax GDP ratio.
Right.
Your reserves have been falling, but they're not as bad as ours were in 1991. I think you have about 2.5 months of it. We were down to 1 month of it. But capital is much more mobile. So the old formula, 3 months imports at least, is no longer actually valid. You need a much higher reserve cushion. I mean, we in India right now, we have 14.2 months imports as a percent of, reserves as a percentage of imports are 14 plus months. So there are, and yes, you're right. I mean, there's low growth. You've been to the IMF very often.
16 times. 16 times.
I think you need an end document.
Yeah.
Following reason. Whenever you go to the IMF, you will be accused, whatever you do, you will be accused of doing it at the dictate of the IMF. We were also accused of that.
Yeah.
But I found it very useful to say that, look here, of course we went to the IMF, and when you're in difficulty, you should go to the IMF. Have this discussion with VP Singh, who asked you, that, look, do we have to go to the IMF? And at that time, I said, look, you don't necessarily have to go to the IMF if you're willing to take even tougher action than what the IMF would want.
Yeah.
What the IMF will let you do is it will give you a little more money so that you can stave off adjustment for 2 months, 2 years.
Yeah.
Now, if you want to say, I don't want to go to the IMF, then you don't have those 2 years. So you have to collapse all your adjustment upfront. And if you're willing to take tougher action, you can avoid going to the IMF. Now, of course, the danger in going to the IMF is that those poor fellows very rarely advise all that needs to be done. They get satisfied with a little bit of reforms because they've been badly hurt by what happened in East Asia, where they tried deep reforms, they didn't actually get it right. So, in effect, the reason you should have your own end document is whatever you do, you should be able to say, we're not doing it because of the IMF, we're doing it because we ourselves felt, or one of our research institutions felt this is the way to go. I'm not...
Okay, the M document is a document that he and his team produced called the Montec document. Let's do, I think, a final poll. Juanita? Okay. So the people who think it's their karma is very low. I am amazingly surprised, and I'm very happy that 56% are saying I'm going to wait and change this system. So Dinesh, I'm done. I took double the time that you gave me to speak, and I finished my presentation and say 56% of the people who voted want to change this system. So I'm open for any questions or brickbats thrown at me or criticism or whatever.
So thank you very much, Murtaza. That was a very insightful and thought-provoking presentation. I'm sure all of us are much aware today after hearing to you of the very serious economic challenges faced by Sri Lanka. So got a few questions. So let me straight away jump to the big questions which we have received. So one is, will the country go into bankruptcy anytime soon? Any suggestions to recover from the economic crisis? Then there's a couple of questions on the same line, so I'll pose it to you together. And the follow-on is, if there was a Sri Lankan bond restructuring stroke default, what would be the impact on the local LKR denominated debt? When, if do you think Sri Lanka will be forced to enter debt restructuring based on what we know now? Over to you, Murtaza.
Yeah. So this whole question of bankruptcy, unlike a firm, there is no bankruptcy code for governments, right? Countries don't have a bankruptcy code. So the literature is actually talking about a mechanism where countries can go to a bankruptcy court and get some kind of solution. The problem is that, in the bankruptcy procedure, especially the US bankruptcy system, there is a defined procedure because you have a lot of different creditors. So you get all the creditors down the same table, and that's how you do a workout, and they don't want you to go bankrupt. So in a country, the answer is that technically you can't go bankrupt because the definition of bankruptcy is very finite. But it seems like, and my firm put out a report many months ago, that it looks like Sri Lanka is insolvent. Now, Lee Buchheit, who is one of the world authorities on debt restructuring, he's a lawyer. He says, look, the Asians are embarrassed. It's misplaced vanity. The Latin Americans find it amusing. So I think what's happening now is that we are not facing reality because, as per my analysis, I'm not in government. It's very easy for me to say things sitting in my office room. I can't see a way how you can continue to service the debt. We should have suspended debt service payments 1 year ago, the moment our rating was cut, because there was no way that we could have refinanced our debt. It's not that, we were generating surpluses that we were using to pay the debt. It was all about going and borrowing new debt to pay old debt. The moment our rating was cut, and there was very little probability of the rating going back up because it doesn't happen like that, we should have suspended debt service payments. We would have probably saved about $3 billion. Now, what happens is that when you do this, you create what you call the subordination problem. So, $1 billion was people got away with in October. Then in July, you paid off another billion. Then you paid off like maybe $900 million worth of interest and coupons. So the people who remain basically are going to be forced to take a bigger haircut. And that is called the subordination problem. Now, in a debt workout, what has to happen is you have to look at who owns this debt. We have, let's take the face value. So around about $33 billion, I think, owned by foreigners. But if you take the total dollar denominated debt, it's maybe about $37 billion. The multilaterals account for about 10 billion. That's very benign. That's World Bank, ADB, etc. And the amount of debt service that you had to pay are supposed to be quite low. I don't know the figure, but I was just told $100 to $200 million because it's been lent out over like 20, 30 years. Then we have bilateral debtors, which is about 5 billion. The biggest debtor is Japan. Then India, then China. China's bilateral debt is small. Most of the debt is in financial market debt, which is China Development Bank, China Exim Bank. Out of about $20 billion worth of financial market debt, $13 billion is in these ISBs. And there's about $2.5 billion worth of Sri Lanka development bonds. So the problem with the ISBs is we don't even know who owns them. Because your fiscal agent is HSBC New York, they are not going to tell the issuer who owns this, right? They have to do a survey, and if people want to be identified who they are, then only they will reveal themselves. These $13 billion that are outstanding are, I think, about 12, 13 or 14 different bond series. Each of these bond series have different collective action clauses. Some have what's called the classic CAC, collective action clauses. Some have a dual-legged action clause. So this is not going to be easy to negotiate. Of course, there are debt workout processes. There are restructuring banks. The most famous ones are Lazard, Rothschild. You have international law firms. They are used to, international markets are used. We are not the only country that probably looked at a selective default. Lebanon is a basket case, Ecuador, Argentina, multiple defaulter. So they are used to do this, but it will take time and it's all issued under New York law. So you have to, this will take 6-9 months. Then you have the bilateral creditors. That you have to go to the Paris Club. Only Japan is a member of the Paris Club. India and China are not members. They are like associate members. Then you have all these other financial market debt, which is owed to China Development Bank, China Exim Bank, and some other banks also. So this debt workout is going to take a long period of time. And it will be in the form of a moratorium. So what you want to do is, because we don't have the capacity to do debt service, you will have to freeze principal payments for a very long time. And you will have to probably clip the coupon for a few years. If the coupons are 6 or 7%, you will have to basically adjust it. So the collective wisdom of the market is telling you that these instruments are worth 65 cents on the dollar. So whatever workout that happens, I'm told the exit yield to the investor works out to about 8%. So that's what's going to happen. And that doesn't, the definition of bankruptcy is not there, but it looks highly likely that we will have to do a selective default. And typically, the IMF is not going to start a program until you have restructured your debt. Because as per their debt solvency analysis, debt sustainability analysis, they cannot lend to us because they generally do not like to lend to a country that will use their resources to pay private sector creditors. So the creditors don't want to accept a debt workout unless there is an IMF program, because if they agree to a haircut, then they want to make sure that the other 65 cents is going to be paid to them. So they want to make sure that the country basically gets back into a proper position. So that's my answer, that technically countries can't go debt bankrupt, but there will have to be some kind of reprofiling of the external debt. Then you asked about what the situation of the rupee debt is. So unfortunately, Dinesh, there was a question that in the last minute I haven't gotten to put in. So to ask this question, what do you prefer? The richer people, say above 5 million rupees fixed deposit, would you prefer a situation where your deposit is clipped by 20%, right? It's reduced by 20%, or you sustain negative real interest rates of 2% for 10 years? And that's one of the reasons why I put that question about the age, because I tested this with the analyst. Because they are young, they said, I'll prefer a haircut on my deposit because maybe their resources are less. But the older people who are closer to retirement, they're not going to like, taking 20% of their deposit. So what has happened in most countries, and it has happened in the United States even after Second World War, is that you will have financial repression where you will have very low real interest rates. And this whole nominal rupee debt will have to be inflated away, because I don't think that they can raise the tax revenue, which is what we were doing in the 1980s, 1990s. We always ran high nominal GDP and we had low real interest rates, and we got rid of the problem that way. So to me, that's what I think is going to happen, that we're going to probably have higher inflation. The central bank will be forced to tolerate, which is slightly above its target range, until we kind of inflate the problem away. So that was your second question. Yeah. Dinesh, anything else?
Yes. So other set of questions around the IMF. So if IMF comes even at the last minute, do you think what's the probability? One, they will ask ISP holders to take a haircut. I think part of that was answered. Will Sri Lankan commercial banks be impacted? If so, if IMF doesn't come, will Sri Lanka look to compulsory convert individuals' USD holdings to LKR? What is your opinion on Sri Lanka failing to implement state-backed development banking to support local manufacturing sector? And why is the IMF pulling the leg of all governments who attempted to implement it? All successful East Asian economies have done this very successfully. Why are we not putting enough effort on this? Over to you, Muthu.
Yeah, so the first question is about whether the IMF will come. As I said, that the IMF cannot come until there is a debt workout, because as per their debt sustainability analysis, you cannot have an IMF program. They have made an exception. I think they made an exception in the case of Greece, because they expected a huge contagion risk to the rest of Europe. And anyway, the major contributors were European countries. And I think they made an exception in the case of Ukraine because of the geopolitics with Russia. But generally, as a rule, that unless you have a debt workout, the IMF program will not start. But of course, they will start technically engaging, right? Then you ask the question of whether the banks, ISBs, are going to be haircut. So you can't say that, no, we are not going to haircut the ISBs of the bank, because the banks, it's under New York law, right? And there are collective action clauses. So in any bond series, I don't remember the threshold, may have been 75% or 65% or something. All the bondholders in that series have to collectively make a decision. So there is no way that our government can say, unless they are going to compensate them differently, they can't say that, no, we are not going to haircut the ISB holdings of our banks. That is not possible, because our banks basically have to join a creditor pool, which will be managed internationally. Okay, the SLDBs, government can turn around and say our banking system will become unstable, and therefore in the debt workout, we cannot, we cannot haircut this. But then it remains to be seen, to get the country back to a sustainable level, how much of that external debt will have to be reduced, and the timing and the profile, etc. So the long and short story is that I don't know, but it will be very difficult to tell the foreign investors, you have to take a huge haircut and keep these people out. It will be very difficult to do that. Okay. Then came the question of about the development banks. So we had two banks. They were called the NDB and DFCC, and then over the years they were made into commercial banks. So the argument is that Korea and Taiwan all had this kind of development banks. So our state capacity to do industrial policy, Dinesh, is very weak, right? So my sense is that although lots of people think Sri Lanka's problem is that we need a development bank, I think as the growth diagnostic analysis of the Center for International Development showed, that was not the problem. It was the non-availability of credit was not a binding constraint. They did a survey, they spoke to so many people. This is all a qualitative analysis. So this argument that we need a kind of development bank does not hold up to this world-class level of analysis that was done in Sri Lanka about 3 years ago. The people were pointing other things like land, I can't get land to do projects. That they were never saying that I can't get credit.
Right. Okay, thanks, Muthu. Yes, the point on land is very much valid. So I guess knows lot of investors who are looking for land but still can't get land even for export projects. Just few more follow-up questions on IMF. One question is, what are our chances of IMF rejecting our request given our past track record of not fulfilling some of the measures they have instructed us in the past? If IMF option fails, what are our alternative options? And what will be the repercussions we will face in the future?
Yeah, so, according to the IMF, they are compelled to help us. Okay, so their director board has to vote, etc. They are willing to help. From what I hear, is they're most prepared to us. The fact that we haven't completed the IMF, it's not like a black mark on us. As Montek Singh Ahluwalia said right at the end, the IMF has got burned so many times in so many countries that they are reluctant basically to force a country to do something excessive. So his advice was that you develop a program within your own country. And, we have kicked the can down the road, Dinesh, for so long, and so many things that are in our best interest, we fail to do, right? So when you get sick, I gave this example of diabetes, etc. You've got to have a change in lifestyle. So we never do that, basically. Every time we delay, we say it's politically difficult. I just cannot understand why we say it's politically difficult, because it's more about taking tax revenues from the rich people. So there are a lot less rich people who are voters than ordinary people. So what's the problem? So my sense is that this time around, that because of the crisis is such a huge proportion, I think similar to 1977, which I was a little kid, so I can't really remember, this is an opportunity of a lifetime, an opportunity of a generation to internally own the reform program. And there was 56% of the people who said, I'm going to wait here and work towards changing the system. So I'm hoping that 56% who said that are going to collectively exercise their voice, basically, and make all these changes and stop playing to the gallery and make a change once and for all. And I think the best and the brightest in us will come out, Dinesh.
Right. Okay. Thanks, Mudasa. So next question is around the doing business indicators. What do you think about our long-term economic policies? Our economic structure looks extremely investor unfriendly. It has been like this for the past 3 to 4 decades, especially a middle-level economy with over 62% contribution coming from the service sector will not attract serious investors into the country. Our manufacturing contribution to the economy is mere 17%. Do you think these are the more serious fundamental problems than the low level of taxation and high government expenditure? Over to you, Mudasa.
Yeah. So, there is a perception that, you need these huge flagship investments. You need port city. These are the things that will transform the country. I don't believe so. As I showed you, that the whole game is productivity, right? So it's about the little farmer. It's about the little shop, becoming little bit better, 10% better, 15% better. And, McKinsey Global Institute, they have shown that if you organization of functions and tasks, that if you do that, in most cases, you can increase productivity by something like 30%. So basic things, how you organize your management, how you set tasks without any major investment, nothing. And you can go, and whoever is asking that question, you can look at the McKinsey Global Institute productivity reports that they have written on so many countries, basically. So my sense is that if we are forced to it, the productivity is the operating word, that all over the place. And we have a long tail in service industries. And I used to sometimes argue that, even things like food service outlets. We have a lot of these food service outlets. You go and sit down in one of those places and see whether, they have been optimized, whether they are productive. If you start improving, that's where lots of people are there. They employ a lot of people. So if you start improving that, then their surplus starts increasing. Then the savings start accumulating. So the amount of resources available across the economy to make investments then you start self-generating, because what you're doing is you're not saving by reducing consumption, but you're saving by reducing wastage, basically. And the famous Toyota system is the 7 waste. So that way, if you get all, now, as I showed you in that survey, there are 1 million establishments, right? Out of the 1 million establishments, 92% have less than 4 people. So many of them are subscale, inefficient. So you start attacking those problems. So for example, say there are about 200,000 kades, shops, long tail. And now I think the supermarket sector is like 20% of the modern trade. So you get those efficiencies to get modern trade, you know, the revenue per square foot area, the labor ratios, everything significantly higher. You allow these companies to grow faster and faster, organize the supply chain, etc. Automatic efficiencies in the economy, the supply chain, backward linkage to the farmers, all those things start happening. Then the way you build houses, we build about 100,000 houses a year. That's where the bulk of the investment goes in. So that's where the major bulwark has to happen in the brownfield sectors. Right? Being investment friendly is about, and you know, I wanted to give you this analogy. You know, the government is an umpire. Okay, ideally he should be neutral. What has happened in our country, if you take cricket, is the umpire is trying to be the bowler, the batsman, the fielder. Yeah, that's not his role. So what you need is basically better governance, less government. And therefore, as those competitiveness analysis from the World Economic Forum, etc., showing, you know, we have fallen. So we have to have a concerted effort to improve on those things. And I think the main thing, Dinesh, is we have to change our ideology. There is an ideological shift necessary in this country to allow free market capitalism to thrive. There is a lot of people who are suspicious of free market capitalism because we have crony capitalism. And I often say that our form of capitalism is I want private profits, my losses should be socialized, right? And that cuts across even the very big business. When they are making profits, it's all for me. When they are making losses, it's the country's problem, basically. So the Chinese system that we look up is a capitalist bastion. I mean, we do business with Chinese mainly to buy things, and you go to China and you see the dynamism of their private enterprises. I mean, even if you order something on AliExpress at 9 o'clock and 10 o'clock in the night for even things that cost $5, the fellow start responding. Our people take, you know, days to get back to you. So we need absolute market economy, capitalism, and we have to really unleash the animal spirits. But you can't have crony capitalism, you know, protectionism and saying import substitution. Those things are not going to work. So this question about attracting foreign investors, it has been said, you must have one level playing field for all investors, right? So if you make the domestic environment very competitive for even your domestic investors, who are the bulk of all investors. If you take the investment to GDP ratio, out of that 29% of GDP, I would say like 95% are domestic investors. So you have to generally improve the business environment for everybody.
Yeah, thanks, Mutasa. Just question around the current commodity prices. So how can we best manage the current commodity market bubble from a sudden bust, as many people have chosen to invest in commodities, including vehicles, due to the lowering of interest rate. Hence, a sudden bust could have an unimaginable impact on the wider market. So I guess this is only one asset is motor vehicle. Probably, like you mentioned, real estate also has taken a lot of investment, and probably the stock market as well. So from this perspective, if you could answer that.
Yeah, so let's take vehicles. Basically, you know, we've had Dinesh that conversation about even the leasing companies. They always comfort that the nominal values of the vehicles did not go down, and therefore, you know, the risk was always perceived to be low because the collateral value, nominal value, always held. Now, what has happened in the post-COVID environment is outrageous. I mean, you're hearing cars that premiums that used to sell at 6 and 7 million are going for 12 million, basically. It's just bizarre. I mean, as I said, Sri Lankans love their cars more than their houses, basically. And maybe they need the cars to attract the opposite sex. I don't know what on earth is going on. but these things are basically inflating at some unsustainable level. So what are they doing behaviorally? Are they basically moving away from monetary assets into the real assets? That will make our situation far worse. Because if you take, you go and put your savings in real assets, you can't intermediate them. If you keep your money in monetary assets and you feel that you're going to get some interest rate, somebody else is using that resources. So, you get an interest rate because somebody else is borrowing it for either making some certain consumption decisions where they have a very high utility by consuming that item and they're willing to pay that for that over a period of time, or basically they are making an investment in some opportunity where the returns to capital are very high and they can earn that money back and pay the interest. So when you have macroeconomic instability and people are basically taking their savings and parking it in real assets, you are going to make the crisis greater and greater. So this is why I am coming out and so aggressively speaking out that if we do not stop this immediately and take conscious of the crisis that we are in, not trying to post it, the citizens, I mean, the average person, what do you expect them to do? I mean, they are no big economists and they can't understand. They will do what they can understand. So they are acting extremely logically and rationally.
Right. Okay, that brings us to the next area, which is on the monetary policy interest rates. How are you on time, Muthusa? Can we take a few more questions?
I can take all night. I'm surprised that we are betting on for 2.5 hours, and according to this count, it's yet showing 400 people on this Zoom call.
So that shows how interesting in the presentation and the interest of the audience in understanding the situation and trying to help the country come out of the situation. So the questions on the monetary policy area is, can you please share your views on the modern monetary theory currently followed by central bank and its real effect on the worsening currency situation? There's another few related questions. Since you touched on the increased proportion of lending for construction sector, what's your take on keeping the interest rates at a very low level? Don't you think that we run the risk of having ghost skyscrapers if we continue with the lower interest rates? Has the government printed more money in 2020 and 2021 than normal? And finally, can you kindly give an indication of how interest rates will perform in the near and midterm? Over to you, Muthusa.
Yeah, so the modern monetary theory, the way I understand it, is that the central bank starts monetizing the deficit and the government pays the central bank an interest. The central bank then returns it to the government basically as their profits, right? I don't think modern monetary policy is happening in Sri Lanka. As I showed you, most of the deficit financing has happened through the banks. So there is credit growth happening because the government is issuing instruments. The money is being used to finance whatever government spending. The citizens are getting the money and keeping it in the bank because opportunities to spend has also come down. And maybe out of fear, they are reducing their spending. So the fact that the central bank is monetizing the deficit is a little bit misunderstood. Of course, they are to some extent there. One part of it is that when the reserves, foreign reserves are going up, they are replacing the depletion in the net foreign assets with the domestic assets. So their holding of government securities has to go up. Now, they are also subscribing to securities in the primary market. Of course, all of them are not very long term. So periodically, they have to keep on subscribing because these securities also come due. So if you look at like what the Federal Reserve, etc., has done, the American fiscal stimulus was like $5.2 trillion, like 20% of GDP, 25% of GDP, because we were so weak to start with. I mean, we didn't have the resources to do that kind of stimulus. Okay, so that's my take on the monetary theory and fiscal, the deficit financing by the central bank of the government. The next thing is you asked about the construction sector, whether there are ghost towers. Well, if you go to near the Hilton Hotel and you look at that Transwork Square, there is a building, right? The 65 stories or 80 stories. I mean, when they came up with that project, I mean, I was hitting my head and thinking they were going to build like 95 stories. There's a Ritz-Carlton, JW Marriott coming. I mean, there was no logic not to build like 80 stories, 90-story buildings in Sri Lanka, basically. I mean, we don't have that kind of economic density that can sustain. If you talk about the middle of Manhattan or Shanghai or Hong Kong or something, you know, dynamic cities with huge economic intensity, then you will argue and say, okay, when I go vertical, basically, it is more efficient. But in Sri Lanka, it made no sense. So either the people who basically came and invested this money were not looking for a real return and they were trying to basically legalize this money, or they had some other motive, or they were excessively optimistic or euphoric or exuberant about the prospects of Sri Lanka, and they came and put the money, but I don't think they had a lot of pre-sales. So whoever asked that question, for sure, you look around the skyline of Colombo and you will find it.
Okay, thanks, Muntasa. So there's a couple of questions about the FDIs and the power sector. So one area of questioning is around the port city, which is being touted as one of the key attractions for FDI. So the question is, what really are the foreign inflows from port city like, and what is it expected to be in the near term? And second question is on the power sector, which you have some insights into. And the question is, can you comment on the implications of targeting renewable energy at 70% by 2030? Power shortages can really affect the economy. And also a follow-on is, in this context, how are we going to fund that? And okay, sorry, one more thing, and it says that on the FDI, it's always said if we attract 2 to 3 billion FDI, we will be okay. How much do you think we need to get out of the problem? Over to you, Muntasa.
Yeah. So let's take the first question about FDI. It's completely misunderstood. You see, FDI is not going to solve your balance of payment crisis, because assume that you attract a refinery to Sri Lanka. The value addition from the building the refinery will be probably 10%. So most of the money that comes will go out, right? Only thing is that if you, the type of FDI you bring, so if you bring FDI into the port city and build tall buildings, the multiplier impact in the economy is very little, because most of the, and I used to argue this 5 years ago, that when you build buildings, somebody was arguing with me, that signals a sign of development, you know, we have to have prestige. I said, yeah, that's funny story, because 80% of the thing is all imported, and we are giving duty-free permits to import Italian marble and German kitchens, and it makes no sense. You know, why on earth are we giving all these incentives for people to build tall buildings and sell it to very rich people? So coming back to your question about FDI, you have to be very careful, because money comes and money goes, right? There are certain types of FDI that you want. And that type of FDI doesn't necessarily mean large amounts. So you could have even FDI with people coming with $1 million or $10 million, but who are creating a large number of jobs because of the nature of the FDI. They could even rent an existing factory, but they're creating jobs, and the multiplier is very great. That is what we want, because that makes, and the know-how transfer, that people develop tacit knowledge which they can build on. So, you know, if you take garment factories, of course, now these days, these are highly modern factories with all air conditioning, etc. But the capital intensity for garment factories were fairly low, but it created a large amount of jobs relative to the dollars that you invested. So we have to be very careful that FDI, basically the number, headline number is very deceptive. It is not indicative of, you know, that our country is going to be better off. And a lot of FDI is not efficiency seeking FDI, where they come to exploit our, you know, labor to export. Most of them, they try to come and build infrastructure, or they are trying to sell products to us. I mean, that's not going to help our balance of payments. The next question asked about the port city. Advocata sent out analysis before the, the bill was debated in Parliament. And we gave a guideline that we are optimistic about it. because with my engagement with the Center for International Development, they said all over the world, special economic zones work. Of course, I am not a believer of a financial center, but special economic zones work because, as they said, when foreigners come into a country, this coordination problem is a huge problem. For them to navigate local government and get all the approvals, etc., is extremely difficult. So in special economic zones like the BOI zones, etc., it's all very sanitized because lots of things are taken care for you. So you can quite literally plug and play. You can get going very quickly. So in the port city, which is really meant for service industries, they try to, I don't know how effective finally the act is going to be, but with that commission, etc., they can fast track a lot of things. Now, I have some experience in doing certain things in Sri Lanka. It's a nightmare. The bureaucracy is designed to, make you fail. The bureaucracy is not designed to make you succeed, basically. So if you're a foreigner and I'm a local with people here and lived in this country and maybe having many machang friends also is very difficult. So therefore, having some setup like the port city and a special economic zone is a welcome thing. Now, I don't believe we should give tax holidays, basically. I'm also not a believer that it will be a massively successful financial center. But I believe that it can be certainly a very successful entertainment center. Because if you take most of Asia, South Asia, you go to India, Pakistan, Bangladesh, if you want to chill out and have a good time, you don't have a very attractive environment. You have to go to Dubai or Singapore. They are 10 times more expensive. So we can compete as long as we get all the international brands, etc. And Sri Lankans are naturally hospitable people. So we can really execute on city entertainment. So that is why I think the port city has a good chance, because the Chinese can execute very good hardware. And you can see the way they are executing. We have to get the software right. And as an entertainment center in the city of Colombo with superior transport connectivity, I am optimistic that it will work. So that was your question about the port city. Then what was the other one, Dinesh?
On the energy.
Energy, renewable
because
energy.
we have to have a 70% target.
If you take the entire basically electricity requirements of Sri Lanka, all you need is 10 gigawatt hours of solar capacity. Okay. The rule of thumb is you need 4 acres for 1 megawatt. So if you want to generate Sri Lanka's entire electricity need, all you need is 40,000 acres. Now that's a bit of a theoretical question, and I will explain to you. So 40,000 acres in a country that has 16 million acres, 65,000 square kilometers is 16 million acres. So of the land area of Sri Lanka, all we need is 0.25. And if you assume that 50% of the land cannot be used because there are mountains and jungles and rivers and whatever, still of, potential land area, only 0.5% of the total land area we need. We don't need to go and put floating solar. We don't need to do any of those things. Okay. So, sorry. So very easily we have the land area to generate electricity, and that's based on an assumption of, I believe, 19 or 20% plant factor. Today, if you do large scale solar, you could probably, with the currency depreciation and all of that, maybe the price will be about 13 rupees. The problem is to store that energy. It will probably cost you 35 rupees. Because the sun only shines in the morning, in the daytime. You don't have sun in the night. Every day is not clear sky. You could put the solar plants all over the country so that you balance out the climate, but you have a fundamental storage problem. So even if you can generate large scale at 13 rupees and 14 rupees, to store the energy, it will cost you about 35 rupees, 40 rupees. So then your generation cost will be about 55, 60 rupees. So it's not all of the energy that you have to store. It's only the part that you need for the night. My sense is that you can't do 70% energy generation, because still our peak rate is from 6:30 to 10:30. That has been changing. Because of more air conditioners, etc. So if you mix solar with, say, wind and other forms, because when the wind is blowing, it may be in the night, and you have to mix it. The probable thing that we can do is to connect our energy grid to India. So they have a much bigger grid, much higher level of industrialization. So at times we can export energy to India, and sometimes we can import energy in the night because they have base load capacity, etc. So we have to also focus on how we develop the grid and how we connect the grid. And it's a low hanging fruit. Right? It's not too expensive. I've seen estimates of maybe, was it $1 billion to connect our grid to India? You know, when you consider the energy security that you will, stability in the grid you will get by connecting, because I'm not a technical person, I've just only rudimentary read on this, that to me, we have been talking about it for 20 years. So why don't we just get up and do it? As far as that 70% target, what happens is that you will have to initially invest money. And if you look at the type of investment that you will need to put like 5 gigawatts, 10 gigawatts with a country that is having a balance of payment crisis, you have to first import all those things, right? So that will then further aggravate the situation.
Thanks, Muthusa. So just in the interest of time, just moving to two more areas. One is one of the most topical areas, the FX situation, and got a couple of questions around that. One is, will the USD deposits held at commercial banks by the public be expropriated? What is the impact on the economy from a dollar liquidity shortage? Newspapers outside of Sri Lanka is writing that Sri Lankan banks don't have foreign currency, so it's not possible to buy food and other needed goods. Is this correct? And finally, current situation of not honoring outward remittances have impacted the local production heavily. What do you think the state should do or implement to arrest this situation? Not doing local production will take the domestic economy to a disaster. Over to you, Muthusa.
Yeah. So let's talk about the dollar crisis. Now, there is a scarcity. There's a scarcity of dollars. Okay, a scarce resource. Although a resource is scarce, what we have now is a shortage because we are trying to control the price. A scarce resource will never have a shortage if you allow the market to operate, because the scarcity will be priced in. Now, we are having shortages because our policymakers, for reasons best known to them, are trying to control the market. And the market basically, as anybody who studied economics, they will talk to you about general equilibrium. Is made out of goods markets, labor markets, financial markets, exchange markets. There are so many markets, vegetable markets, fruit market, etc. So we are basically meddling in every possible market in Sri Lanka. So, because everything is interconnected, and that's the whole concept of a market economy, that it is price coordinated. That is what Adam Smith talked about 300 years ago, that it is the price signals that send incentives for producers to produce and consumers, if price goes up, to reduce consumption or look for substitution. Every market is turned topsy-turvy. And increasingly, the rulers believe that they can control it. So they are putting more and more effort to try to control it. So what you are seeing in the foreign exchange market is an outcome of problems that are emanating from all over the place, in the goods market, the service market. This is not just a problem of foreign exchange. Okay. So the first thing that we have to do is basically, if we allow the markets to basically operate on their own, initially there will be a lot of volatility because you have suppress, and then suddenly you let go, everything will go flying all over the place. The citizens also can kind of anticipate that there is going to be scarcities. And because they are anticipating shortages, they are also hoarding. Right? So if we buy a little bit more than we normally would want, that is hoarding. Right? So it is not only the rice people and the sugar people who are hoarding, the households and the families, everybody is hoarding. So when you have a problem, basically, when you have hoarding behavior, you accentuate demand and the price is getting worse and worse and worse. So my simple answer is that all this currency that they are trying to hold it, because they are trying to hold it on the basis that our debt is also denominated in rupees, and if the currency depreciates, the translation effect of the debt is very high. So in our debt sustainability analysis projections, those exchange rate shocks are taken into account. That so the thing is that our policymakers believe that they can control. So as I said, there's an ideological problem that we don't believe in free markets, and free markets have got a bad name in Sri Lanka. So basically, everybody thinks that the government can control and somebody else can control, and it's not going to work, right? So one big bust up is coming somewhere. This pressure has to be released. The second question, Dinesh, what was the second one? About the deposits. Okay.
Yeah.
Deposits, right. So as I said that the banks also have retained profits in dollars. So the question is that how much of retained profits that they have can be offset against the losses. So I don't have the visibility to tell you what the gap is, etc. But some of the hit, if they are to take a hit, they can offset with their own money.
Right. So I think I believe the question is more in the context of the government expropriating.
So the government can't expropriate. I mean, they can't expropriate unless they have to go and expropriate from millions of people. All they can say is that if they have a debt default, they can do two things. They can just say that I want a haircut, or I'm going to pay you back in rupees. Okay. So then they can tell the bank, okay, I'm not going to pay you maybe on SLTBs, I'm going to take a haircut, hypothetically. The balance I'll pay in rupees, and I'll pay it over a period of time. So unless the banks have their own reserves to be able to absorb that, they may have to then turn around and tell the depositors, I can't give you all the money back immediately, but I will pay you back over a period of time. So that's the kind of simple arithmetic that I can think of. But I don't know how these things go all over the place, because myself, my knowledge is only by reading and analyzing. I have not lived through it. I'm sure a lot of our people and people on this call also who have lived through tsunamis, etc., know what it was like. So if you tell tsunami next time, people know what to do. We have never had this kind of crisis in our country, but there are so many other countries in which this has repeatedly happened, and it's not the end of the world. I mean, some governments are better. He gave the example in Korea that within 3 years they paid the IMF back.
Yeah. So I understand in India, so there was a similar issue, right, where the public came in when they were in a low point.
Well, we as citizens, this is this famous Kennedy phrase, ask not what your country can do for you, ask what you can do for your country. That we have to collectively, everybody will have to get together and make certain sacrifices and then get going. And I am afraid the rich people will have to make much more sacrifices.
Yes. Yeah. So moving on from there, Muktasar, there's a question around the stock market. So the question says, are they forcing people to invest in stocks? So by they, I mean, it may be probably the policymakers it's being referred to. So I would like to have your thoughts on that.
So I don't think anybody is forcing people to invest in stocks. As I said, I got a lot of brickbats thrown. The reality is, over the years, Dinesh, it's a very concentrated market. There is a long tail. There's a lot of people who have come on to investing, active investing. Maybe the tail is 50 to 20,000 people. And they may be accounting for 10 to 20% of the total turnover. The rest of the turnover is concentrated on a few thousand accounts. And the real movers and shakers, as I said yesterday, basically, it's like I'm just anecdotally saying that the membership of the swimming club and the golf club. But it's a very narrow circle of people that kind of, if you see the names and you look at the shareholder list and you look at the names, you can figure out who these people are. They are AB connected people. So it's not like, like in the US system or something where you have millions of households with their 401k plans. And it's not. It's a very limited, because the free floats of the stocks are limited. And one reason that they can, send the price up is the free floats are very limited. So they do a liquidity squeeze. And when they do the liquidity squeeze, they can send the price up very fast. So those same people who send it up will see it all coming down unless they find somebody to unload it on. Historically, you would try to unload it on the foreigners. And that's why they used to target all the blue chips. This time all the foreigners are selling. Then they also try to put it on the statutory institutions. This time, I think those people are too scared to do anything because even the unions are looking. So I don't know who these people are going to, some of these highly inflated stocks that don't even have earnings underneath that. I don't know who they are going to unload this on.
Right. Okay. Thanks, Mutasa. And you touched upon improving productivity in the enterprises. So one question we had come through is the issue of the serious labor shortage and crime in the agricultural areas, particularly drug issues. So in summary, the question is asking for potential solutions for this labor shortage and asking whether getting guest labor is a potential solution, and what are your thoughts?
Yeah, so
on that?
typically, Dinesh, how it happens is that when labor is short, the cost of labor goes up, right? Wage rates go up. So at the margin, you have the option of mechanization. And what economists call, you make a trade-off between labor and capital. So how people get released from the agricultural sector is that you have better jobs that happen in the cities, and people leave the agriculture to go look for jobs that pay better salaries. And therefore, the farms basically have to figure out some way of making up for the shortage of labor. So what normally happens is that then it justifies at the margin to invest in capital assets like tractors, various forms of mechanization, because you can then justify the costs. So what will happen in Sri Lanka is a similar trend. Now, the problem here is, I'm not an expert in this area, but the land holdings are supposed to be very small. And whether you can get the productivity benefits from very small holdings is the challenge. So I can give you the example that in 2016, I had the opportunity to attend a program called Leading Economic Growth in the Kennedy School of Government at Harvard, where one day there was this person, one of the lectures was this large-scale agricultural company from Argentina. They were doing cereals, I think soya beans or something. So the economics and things are very different. But what he said is that the land owners continue to hold the land. So they aggregate the agricultural plots and they do the farming. So the landowners continue to earn a rent. So these big agri-businesses come and they pay the farmers or the owners, landowners a rent, but they use all the modern methodologies to do this. And I went to talk to that gentleman. Basically, he says, okay, I have not operated in Asia. You know, in Latin America, it's a massive continent. They have the pampas and huge fields. But I feel something like that may happen in Sri Lanka, where maybe it has already happened that, you know, larger agri groups, industrial scale agriculture, they will have to take together all these small plots and kind of aggregate them and then do farming with mechanization and modern methods. That is what will probably have to happen.
Yeah. Thanks, Mutasa. Then there's one question on the tax amnesty. So we already saw how bad our tax revenue as a percentage of GDP. So the question is basically asking your thoughts on the recent tax amnesty in the current environment and what why it was done.
Yeah, so I don't know, right? I honestly don't know why they did it, etc. But I've always asked the question for years. Basically, we had exempted people from taxes. There is no capital gains. The tax rates are quite low. So the incentive to hide money is very low. So it cannot be tax money, tax evasion as the main motive. It could be that, you know, money has been accumulated due to other reasons. And therefore, what they are saying is that if you repatriate it back to Sri Lanka, that we will basically allow you to legally bring it into the country with very low penalty. I have done some courses on taxation, and where they have said that, you know, the signaling effect is very bad, because what you do is basically the people who are compliant and paid whatever taxes that they had to pay, is very unfair by them, because the guy who evaded is getting away with nothing. And there are countries that have repeatedly done. And there are all case studies that I've also done on all these tax amnesties. So to me, I'll be very surprised if a large amount of money comes, because basically if the people feel that they can't take the capital out of the country, what is the incentive for them to bring the capital into the country?
Right.
So
Okay. Thanks.
unless it's targeted at a very selected group of people where they have a different type of motive, I can't understand if you are a rational person where with this macro instability in the country, why would you bring it?
Right. Okay. Yeah. And particularly money invested overseas in this context.
Yeah.
In the interest of time, I'll come to the penultimate question. So it's what is your focus for the Sri Lankan? Sorry. Do you see any trend that the present government taking expert knowledge like yours for government strategic decision making? What is your forecast for the next 2 years for the Sri Lankan economy if things continue in the same pattern? And following on, what's your advice for a youngster with good potential? Look for migration. It's so difficult to build a solid foundation for a life here in Sri Lanka with this given situation. Over to you, Mutasa.
Yeah, so the first thing is about advising governments. I came here as a chairman of a small think tank called Advocata. The name Advocata comes from the word advocate, right? So we are about advocating good policies. And we realize that with the limited resources we have, a significant part of our mandate is to explain economic thinking to the population. Our target audience is 10,000 English thinking people, 100,000 Sinhala thinking people. My colleague Dhananath, who is a maestro in Sinhalese, he's hitting the big time with the 100,000 Sinhala. We have enormous amount of work to do because we got to get the message across. So I feel basically more than government, basically, our job is to really educate the people, because through the people, the action will happen. And this understanding of market principles about the key pillars of capitalism, etc., is very poorly understood, because what my understanding is that even the commerce syllabus in the secondary school system, it's a very superficial subject that is taught. So the first thing that for a private entity like us is to go and advocate on platforms like this and wherever possible to educate as many of the decision makers and influencers in society. So our primary thing is more than government to engage with as many influencers as possible. And some influencers have tremendous multiplier effects that if we convince them, they can convince 100 other people. Okay, so it's basically we are having an ideological battle that we believe that markets are the best, that every country that embraced markets, or most countries that embrace markets, have prospered. Those people who didn't embrace markets, who tried alternate economic models like the Soviet Union, which didn't have a price coordinated system, ended up in a disaster. They went bankrupt. The second thing that you asked was, there was one about young people, what is the advice? What was the other one, Dinesh? The second question?
What is your forecast for the next 2 years for the Sri Lankan economy if things continue in the same pattern?
Maybe I can tell you this thing. What normally happens is when you have a crisis like this, if you look at the literature, they talk about a lost decade. And Ricardo Hausmann, he talked about the big bad wolf and the Latin American crisis. Most of those Latin American countries didn't go nowhere in the 1980s. Okay, but you saw how the Koreans came back. You look at Thailand, the Thai baht went from 10 baht to 50. Today, the Thai baht is 30. Their current account surplus is 7% of GDP before COVID. Now, I don't know what has happened. I mean, as somebody told me, after 1997, all the crooks went. So there could be a tremendous opportunity of a new beginning in Sri Lanka. All right. So what the outlook is in the next 4 years is the more we prolong the adjustment, I'm afraid the pain will be harder and it is getting postponed. And in the meantime, we are going to have uncertainty and indecision and nothing happen. Wait and see, wait and see, wait and see, wait and see. Okay. So in answer to that question, what happens the next 4 years is also going to happen what they do immediately. If they acknowledge that we have a problem And that they say, look, now, we can't go on as usual. We have to change our ways, and a trusted communicator, a leader comes forward, whether from this government or wherever, and, tells the people that this is what we have to do. I think most people will fall in line and realize that, look, we will have to make changes. And I keep saying that most of the pain has to be taken by probably the 10% of the rich people in Sri Lanka. The next question is, what is the advice to give the young people? It is a tragedy that all the young people want to leave the country. So our best and able. In fact, I told Juanita before this to get me the data of how many CFA charter holders, level 3 charter holders from 1995 to today passed out. I don't know, Juanita, whether you got that figure. I had an estimate in my head of about 600 or 700 people.
Yeah, so we got the figure.
How much
so
is
we
that?
have about 330 plus people have passed out. And out of that, about 1/3 has migrated overseas.
Okay. So that's actually not too bad a figure. Okay. So we have been able to retain 2/3 of them in Sri Lanka. And I suspect that most of that, because we have had much higher pass out rates in the recent years, it's highly skewed to these younger people, the number of people who are in Sri Lanka. So what you want to do is that, my sense is that the young is our future. So there could be two approaches. That's what I asked that question. How many people want to remain in Sri Lanka and make a difference? So if we take a negative view and say, my God, things are really bad, I'm going, then there will be very few people left behind to make the changes that are necessary. And it is more and more of our people, especially younger people, because the older people are too tired and maybe they are beyond redemption. It's the young people who have to be idealistic, who have to fight for the change. So I would tell that person, you go and improve your skills, but don't be a misplaced patriot. I mean, if you get a great break to do something, then, if you can exercise your skills, then that's a personal decision you have to make. But if in whatever way you can to keep improving your skills, because I can tell you one thing, you will never learn more than in a crisis. The learning, because everything becomes so much difficult, the amount of learning that you will make in a crisis comes. That is why all these very smart fellows from the Indian Institute of Technology who went to America basically became all the CEOs of the top. These are guys who went 25, 30 years, because they say that in India, things were going wrong all the time. Electricity was getting cut, water was getting cut, nothing was predictable. So they could handle uncertainty. So when these guys went in the 1970s and 80s, of course, they were India's best brains, all the IIT fellows. When there was deregulation and all in the airline industry and so many industries, the American guys couldn't handle it because they were used to order. The Indian guys, they knew disorder. So they thrived in the disorder. So what I would say is that a crisis is a wonderful learning opportunity.
So, Murtaza, the final question to end on a positive note is what can we do as individuals to help the situation in the country? 56% in the survey is willing to stay and work for change, but it should be collective with an effective leadership. Will you be that leader? Over to you, Murtaza.
I don't know why, Dinesh, it's so easy to talk, right? I realize that it is so difficult to do. And I pity all the leaders in this country, because basically, our people, the moment you try to do something, they will protest and they will say, no, this, that. So you need an exceptional leader that basically who can, convince the people, and that ability to convince and really touch the people. So you need a leader who is what I call, he has the human touch, that he can really feel the people and emotionally connect with them, because you can't have a rational actor here who is making logical and rational arguments saying that we have to do this. You got to have a leader who can really get down with the people and, touch their flesh quite literally and get them to believe in him. And he has to have noble intentions, so he has to be back with a great team. and that team basically has to do the right thing. So I always said Sri Lanka, all it needs is a few good men. There was a famous, Jack Nicholson film, no, Few Good Men. I always use that title, that Sri Lanka needs maybe 10 good men, and men or women, basically, in the key positions. They can turn the ship around.
Okay, thank you very much, Murtaza. So with that, we will bring to an end today's session. And I would like to thank you for spending your valuable time with us this evening to educate the participants on the challenges faced by the Sri Lankan economy and possible solutions. And I'm sure each one of us has a big role to play in that, and through collective effort, we can overcome the situation. Thank you very much, Murtaza.
Thank you to everyone. I can see that there are still close to 300 people basically who are locked down. At the height, I think there were over 600 people, and I don't know how many people came on Facebook. As I said, that I said it the way I see it. I looked at data. I thank all my analysts who have done most of the work in preparing all these slides. I've been harassing them for months and years, basically, to prepare. Also the team at Advocata, and also to the team at CFA to make this day happen.
Thanks, Murtaza.